What's up, man? How you doing? Um, yeah, bro, I'm just looking at some trades right now. I'm just waiting for this EU and GU to play out. I think this could go higher, bro, just to let you know. But what do you call it? I'm just might take TP around here, where I told everyone else to take TP. Um, Gold looks very interesting. Very interesting on gold. Like very interesting. This thing is pumping up high. We missed the buys, man. I just didn't wake up early enough to get in on these buys. I'll be honest, man. I was just so tired when I woke up today. I was like, ugh, I'm tired, man. And yeah, I was like, yeah, Monday's not the really like. It's a weird day sometimes, But yeah. You see, I've got possible. There could be a possible short on gold from here, or maybe a bit higher, just like a small risk to reward kind of short. But this thing looks like it might break above these highs, um, above the highs around 3372 around here. I think we might break above here. I've got levels at 3414, one of my levels, somewhere here. I think somewhere here is a good short. We're looking for that lower high. It looks like gold's giving it to us possibly. Um, Yeah, I don't know, man. I don't know. We'll have to see. I'm very interested to see what's going on with this gold. What's pound doing? Gold just hit one of my levels right now. Very interesting. Like it's tempting to short gold right now, just because, but it's early. That's the problem. See, when it runs up this early in the morning, it's really suspicious, man. Really suspicious. Yeah, like this could be the high of the week. That kind of suspicious. So yeah, I don't know, man. Just have to wait, I guess. Just don't know if this is it. I want to put a big lot size on this gold because I do think it's gonna go down, but I'm not sure if this is the right shot right now. You know. 1 second, I'm just loading up some things. Yeah, I have to go low risk at this, but I feel like this is gonna go down. Good possibility. It's not a bad risk to reward if I take this trade right here. I'm looking at it right now on my other screen. I'm like, okay, cool. I can short it. You can have a 230 pip stop loss, but the gain could be something like, the gain could be crazy, man. The gain could be like 100, so 1,500 pips. 1,500 pips could be the gain. 200 pip stop loss with 1,500, gain. It's tempting, man. It's a good opportunity to short. I'll be honest with you, man. I'm gonna try it. I think. Yeah, I'm gonna try it. I think. If it does well, it goes well. If it doesn't, it is what it is. Um, yeah. I don't know if I'm gonna send this signal to the chat, just because, yeah. But I'm taking like a low risk on this. So it's not like some crazy high risk, kind of trade. Um, yeah, it's not a crazy high risk kind of trade. Just me risking. I'm just taking some rare. It's just a small, like 200 pip stop loss, but 1,500 pip gain kind of thing. Yeah, I think this is going to be a good trade. I need to start logging these trades I'm taking as well. Oh, yeah. loss at? Yeah, bro. So I'm taking this gold short here. Don't ask me how. I know, but why I'm taking this is interesting. But yeah, 45 is a good stop loss. Yeah, literally taking it with multiple accounts right now. 45. Yeah, because if it goes down from here, man, it's a good risk to reward, to be honest, man. I feel like I should put more lot size in this though. I mean, it's worth more, to be honest. Yeah, it's worth a bit more, but if I'm wrong, innit? Hmm. I should probably put a bit more size on this gold, because it is a hedge as well against my other positions. Oh well. You know, it's funny if I'm wrong on this. Like, I actually don't mind being wrong on this. Um, it's just interesting, but yeah, yeah, yeah. That's which one I think you can save the. Really, you can save the CVC file and from empty phone, upload it to cheat GPT and make it. No way, ASAP Tobes, you're a G, bro. You're a G, bro. I might do that actually. Yeah, yeah. So I am short in here. So bro, if you wanna do this, obviously it's not financial advice or whatever. I'm not gonna send this to the Telegram, but you know, since you're here and stuff, I'll tell you what I'm doing. I'm putting a stop loss here at 45, and the TP is gonna be crazy, bro. The TP, what is gonna be like something like this, bro. Look, this is the risk to reward. So if we're wrong, it's okay, cause we only take a small loss to the compared to the win that we're gonna take. But I'm kind of confident that that gold's gonna go down this week. Only thing is, there's FOMC this week on Wednesday. So what I think, I have a theory, they might manipulate the price. Um, they might manipulate the price like all the way up until Wednesday. That's my theory, if that makes sense. So that is a theory. However, today it's gone up a lot, and it's at a level right now where it can be shorted. So if I put this small stop loss like this and aim for like the crazy lows, um, it's a good risk to reward. And if I'm wrong, what we'll do, we'll wait for the next level to be hit. You know, there's a level over here. There's two levels, one level here and there's one level there. And one of these levels is going to be correct. And once we get the correct level, we're going to have a monster trade, bro. It's going to be like a monster. If we're wrong here, we just take a small loss. Make sure your lot size is small or whatever over here. You get me? Um, and if we try it again, the next place, right? And again, we take like a slightly bigger, lot size. And if we're wrong again, then we take the bigger lot size. At the end, the third shot should be the shot that we get it right. So just use small stop losses. You get me? Like and yeah. I just this is my strategy. You know that I've back tested and it works. You know, so if you follow this, it should be good. In the end, we want to be in profit. You know, we have to be okay with taking a loss because we might take a loss here. Um, yeah, we might take a loss. We might very well take a loss, but you know, yeah. Also, if I don't think I might get out of this early as well, just take some profit out of this early. If I think we're being scammed. Like if this, because what could happen is it could dip like this and then they go like that, if that makes sense. So it could be one of those kind of trades. That's the thing. So kind of have to keep an eye on it, you know. But to be honest, we're doing good, man. GU's up like from my entry, you know, we're up 23 pips. Euro dollars up nicely as well. It was up 16. So it's doing good. We're up 12, I think, on this. I think this is gonna break that high. I'm looking to make 50 pips on this trade. It's about 50 pips, yeah. Same with pound. I think we are gonna make 50 pips on each of these things. Yeah, I think we are about to make 50 pips on each of these things. So yeah, we'll see, man. I'm just waiting. Yeah, there are other trades to take, like this USD Swiss looks like a short. USD Yen might be a short, but I ain't really messing with anything else. I ain't really messing with anything else right now. So I might send this to the group, but I just don't want the group to take a big lot size on this trade, you know. Ah, fuck it, I'll just tell them. Whatever. I'll just tell these guys, yo, take this trade. 3313 stop loss. 3345 TP 3177. Guys, yeah, we could be wrong on this trade, but we'll wait. Yeah, everything else is running nicely. Um, yeah, man, nothing much to do. We just gotta wait, I guess. And yeah, we should be good. I am going to maybe put the news on. See what the news is saying.
Out Taiwan. The Taiwanese currency absolutely surging recently. Sources telling Bloomberg that Taiwan's central bank intervened to slow its appreciation following speculation that exporters are converting their US dollar holdings back into the island's currency.
Because they're concerned over the dollar's outlook and speculation of this trade deal. What I find so fascinating about this is not just the fact that we're seeing this intervention, but also the verbal intervention from the government. We urged market commentators not to speculate irresponsibly about the foreign exchange market, as such comments can destabilize the market and potentially impact the broader economy. So it's your fault, analysts. Good morning.
We've said for weeks now it takes a long time to fully internalize the impact, the consequences of the changes that this administration is pushing. And I think the moves that we're seeing in foreign exchange over in Asia are a decent example of just how difficult it is to do that and how much time it takes to. I want to turn to commodities because we're seeing big moves there as well. Brent's down by 1%, WTI's down by 1% also. Crude prices dropping after OPEC Plus announced plans to increase supply next month. The move raising concerns of an oil glut as global trade disputes threaten to undercut energy demand. What the objective of the Saudis is, on the record they want to punish, I believe, the cheaters in OPEC Plus. But there are other people who believe there's more than just that going on here.
So Javier Blas talked about this a few days ago, the fact that there's a number of different issues happening at once when it comes to adding more supply to the market. Halima Croft last night put out a note. She was talking about His Royal Highness Prince Abdulaziz, the Saudi energy minister, strongly believes in active market management, but also the principle that every country must pull its weight. Officially, Kazakhstan, Iraq, UAE, we see you, you're cheating, we're going to stop it. But also, the President of the United States is going to the kingdom next week. The President of the United States wants to see lower oil prices. Chevron's Mike Wirth was on Fox News over the weekend talking about how he believes this administration when they talk about sanction policy, maximum pressure on places like Iran. Potentially Saudi Arabia is getting ahead of all of that.
The president is getting lower crude prices. WTI this morning, 57.56. That's the story of the crude market. Here's the story elsewhere. The President of the United States, Donald Trump, doubling down on his message to consumers, downplaying the cost of tariffs.
I don't think a beautiful baby girl that's 11 years old needs to have 30 dolls. I think they can have 3 dolls or 4 dolls because what we were doing with China was just unbelievable. They don't need to have 30 dolls. They can have 3. They don't need to have 250 pencils. They can have 5. We don't have to waste money on a trade deficit with China for things we don't need, for junk that we don't need.
The comments coming as Trump says he's willing to lower tariffs on China because at the current levels, the two countries have essentially stopped doing business with each other. Joining us now is the former Trump White House trade official, Kate Kalukowicz. Kate, welcome back to the program. I just want to set the scene because I think things this time around are different to what we saw back in the president's first term in the White House. The different buckets, the different objectives that you've been focused on, Kate, can we just start there?
Absolutely, because there are many different buckets. You've just focused on one, which of course is China, which I think I keep in a separate bucket for now. The president is very incentivized at the moment to negotiate deals with respect to a different bucket, the reciprocal tariffs. He's very anxious, I think, to announce a deal this week to show that these reciprocal tariffs are producing the sort of leverage that he has indicated they will to bring countries to the table to resolve these long-standing trade imbalances that he has so prioritized.
One way of addressing a trade imbalance, if you're purely focused on one thing, the trade deficit, would be to revisit the purchase agreement struck several years ago. But Kate, given the incentives and objectives elsewhere, I'm just wondering whether that's sufficient this time around.
Well, look, I think the president is anxious to show some wins here fairly soon. So if I'm a trading partner and I'm thinking about what I can do to get to the table, to get a deal in principle announced, it's through these large-scale purchases because there's something that can be achieved relatively quickly, especially when compared to some of these long-standing non-tariff barriers that the president has complained about. We heard Treasury Secretary Bessent last week signal that the Trump administration continues to be concerned about the Phase 1 deal and the purchases that China has not made. So I think that's a fairly good signal that they'd be willing to accept that as some down payments.
Kate, at the moment, a lot of smoke signals coming out of Washington from the president himself, almost insinuating that we're going to get a deal as soon as this week. Who is that going to be with?
That's a great question. You know, I think if I'm a trading partner, I am also watching this process very, very closely. You know, the president is under increasing pressure to produce a deal because, of course, the American public are growing concerned about all of these tariffs. I think congressional Republicans as well are weighing in privately, wanting the president to show that we are not going to be under these tariff rates forever. So if I'm a foreign trading partner and I see this pressure, it does increase my leverage as well. You know, we have seen, of course, increased optimism around talks with Japan, Korea, and India. So I suspect one of these nations will be the first to go.
John mentioned earlier the fact that trade deals take a very long time, which is maybe why the administration is going to lean on purchase agreements. We know the president from the first administration does not like MOUs, but can you give us a sense of what kind of outline we could see when actually he announces an agreement with a trading partner?
Yeah, you know, trade deals do take a long time. And as a former trade negotiator, including with the European Union, you know, these comprehensive single undertakings take years and years and years. These are not those trade deals, though, and I think it is important to remember the United States is bringing to the table one offer, and that is not to implement reciprocal tariffs. It's really up to the trading partner to signal what it is prepared to do in return. So I think the president would be willing, in principle, to accept some very high-level commitments that it can pocket and then move on toward more regulatory reform or longer-term tariff reductions. So I do think we could have, you know, some of these very high level in principle agreements, not MOUs per se, but agreements from our trading partners, as you said, to make high value purchases, to bring tariffs down unilaterally. But in some ways, I think we can move faster than some of these previous free trade agreements that we had done in the past.
Kate, you've been in the room. Can you just share with us your experience? We all hear lots about the European bureaucracy. How difficult is it to negotiate with the Europeans?
It's incredibly difficult, not least of all, of course, because the European Union is comprised of 27 individual countries. Now, of course, they have allowed the European Commission to negotiate trade deals on its behalf, but we have very different economies and very different personalities of these member states. Now, Europe, of course, represents quite a lot of significant trade barriers that the president often talks about, and these are based, you know, in historically difficult regulatory environments. So it will be exceptionally difficult for the European Union to produce the sort of deal that the president is looking for, unless the president is willing, of course, to include topics that are not really trade related. The military spending issue always comes to the fore, and we'll have to see if the Europeans are willing to put that on the table.
And that has to be done also at the national level. So, Kate, when you approach these talks with the Europeans, just what do you do differently? Do you push on certain nations to put pressure on the Commission, on other countries? How does this work?
Yeah, typically the United States, of course, because it has these long-standing relationships with member state governments, tends to approach leader-level discussions in that way. The European Commission is not the natural counterpart for President Trump, and so this is another reason, of course, that we've seen challenges here. Now, President Trump, as we saw in his visit to Italy, has a very close relationship with the Italians. The Germans and the French, in their roles, of course, will play leader-level discussions as well. And all of this will be to create some political pressure on the European Commission to come to the table.
Kate Kalukowicz. Kate, thank you. As always, the former Trump White House trade official with some insight there and to how difficult it is to deal with some of the Europeans sometimes.
Absolutely, because you're dealing with all these different voices and all these different priorities coming out of the continent, and it's very difficult depending on who does the president want to negotiate with when he wants to negotiate with all these different countries in Europe. But I go back to the FT piece last week, and you heard from the trade commissioner, and he was talking about the fact that they might have more purchases. Think of agricultural, think of LNG. This could potentially get those discussions moving along in a faster way.
This is something that was negotiated in the press months ago. Ursula von der Leyen, the European Commission president, came out almost immediately and said, guess what, we can buy more LNG. Let's go.
I don't think actually it was before Liberation Day. Wasn't it after Trump actually clinched the election and became the next president of the United States? Almost immediately Europeans were like, we're ready to go and buy more U.S. LNG. I think it's going to be more than that, though. You hear what the president says about barriers when it comes to things like agricultural, cars, digital service tax. There's a lot of different policy issues they have with Europe that potentially they want to mitigate in this deal.
Equity futures this morning negative by about 0.8% on the S&P 500. That's your price action. Here's an update on stories elsewhere this morning with your Bloomberg brief. Here's Yohara Arnold. Hey, Yohara.
Hi, John. Japan's finance minister says his country won't use the sale of its U.S. Treasury holdings in trade negotiations with Washington. That's an apparent turnaround from his comments on Friday. Japan completed a second round of trade talks last week and expects the next set of high-level talks to come in mid-May. Meanwhile, Shell is considering an acquisition of its rival BP, sources telling Bloomberg. A final decision will likely depend on whether BP's stock continues to slide after losing nearly a third of its value in the last 12 months. Deliberations are in the early stages, and Shell may opt to focus on share buybacks rather than a merger. And the Trump administration is planning to release a proposal to modernize the U.S. air traffic control system this week. The need for the upgrade was highlighted on Friday when United said it would cut 35 daily round trips at Newark International Airport due to technology breakdowns and a staffing crunch. That's your Bloomberg Brief. John?
Yahira, thank you. There was one air traffic controller, I think, quoted in the press over the weekend saying that Newark isn't safe.
So do you know how many people sent me that and said, I really hope you're taking the Acela down to Washington, D.C. every time you go? When you have an air traffic controller coming out and saying, this isn't safe, don't fly, scary stuff.
That's quite a shocking quote, that's for sure. Up next on the program, picking your own data.
When does it become the Trump economy?
It partially is right now, and I really mean this. I think the good parts are the Trump economy and the bad parts are the Biden economy, because he's done a terrible job. He did a terrible job on everything.
Up next on the program, Kurt Ryman of UBS joins us next from New York City. This is Bloomberg.
In case you missed it, on the China Show,
President Trump has called Wednesday Liberation Day, and that seems like liberation from the rules-based order on trade.
We're seeing a lot of orders being canceled, particularly on product being sourced out of China. There's a threat to seeing a shortage of certain products because, look, China's our number one supplier of footwear. When I got this job 15 years ago, it was 88% of our volume to the U.S. It's now 56% of our volume. But the fact of the matter is, most of that volume is for price-conscious consumers here in the States.
One of the things you see here when you talk to suppliers and buyers is that this essentially gives Asia and Africa to Chinese supply chains an influence, because now as American firms have to focus more on the home market, the companies and organizations with the money to invest in new areas, that will be mostly Chinese money.
don't miss the China Show live every weekday.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Equities this morning slightly lower, but down by 0.8%. I say slightly because 1% on the equity market's nothing these days. On the Nasdaq at the moment, we're down by 1 full percentage point. 2 days away from that Fed decision. This from Bank of America and Shruti Mishra. The April jobs report vindicates the Fed's patience. Now the bar is meaningfully higher for a cut in June and perhaps even in July. Resilience, the word you heard again and again on Friday. Let's see if that resilience continues. Under surveillance this morning, the Trump economy.
When does it become the Trump economy?
It partially is right now, and I really mean this, I think the good parts are the Trump economy and the bad parts are the Biden economy, because he's done a terrible job. He did a terrible job on everything. Ultimately, I take responsibility for everything, but I've only just been here for a little more than 3 months.
So here's the latest this morning. President Trump highlighting the good data and downplaying the bad data ahead of this week's Fed decision. Kurt Ryman of UBS writing, our view is that the Fed prioritizes eventual deterioration in the economy and labour markets over the inflationary impact of tariffs. 75 to 100 basis points of rate cuts by the first half of 2026. Kurt joins us now for more. Kurt, good morning to you, sir.
Nice to be with you.
Payrolls was decent on Friday. Do you think there's a risk here of extrapolating that out a little bit too soon, too quickly?
Yeah, very much so. So everybody knows economics is always telling you the labor market report is always looking in the rearview mirror. It's not about where we've been. The markets are thinking about where we're headed. The tariff and where that heads is going to be very much determining what the outlook is for the economy. But right now, even your own median survey forecast for growth is way down from over 2% at the start of the year for 2025 to below 1.5%. And the view on inflation is that it goes north of 3% from its more comfortable level today. Still, this is a tension for the Fed. I don't mean to say that this is going to be an easy decision, but I think they'll prioritize the erosion in the growth numbers if the tariffs stay at these levels for a persistent period of time. It's magnitude of the tariffs and duration, and that's what we should be looking out for. I think the labor market specifically is going to be really difficult to monitor, because not only do you have the potential erosion of jobs just because of the tariffs and the hit to the economy, but what happens on the immigration front when you're seeing the number of people crossing the border and the encounters with Customs and Border Patrol officials basically at a trickle from 100, 200, 300,000 a month. So that'll also play into the calculus.
Can you explore that a little bit further? What happens when you have both a supply shock to the supply and the demand side simultaneously?
Yeah, well, you're going to the risk is that you get shortages in parts of the economy. You think about some of the areas where undocumented immigrants would typically work, and food services, food production, agriculture. I mean, these are all the areas, if you're concerned about grocery prices, that would lead to higher costs of wages, which will then feed through into the real economy. So that's what I would be thinking about, is these supply shortages. This is not that different, in theory, to what was going on during the pandemic. This is a policy-induced, I mean, yeah, it's clearly different. It's tariffs, not a health crisis, but it's a policy-induced shutting of a large part of the economy, both from the tariffs but also on the immigration side.
There's a big difference, I think, for the policymaker, though, and I know you understand this, in the sense that this time the president has the vaccine already. He can just come out and say the tariffs are off.
Yeah.
Now, if you're a policymaker, how much harder does it make it to set policy for that kind of world? Something that can change a week away, a month today.
I think it's really difficult. Yeah, I mean, if you came into this year, you would have been thinking that the Fed was likely to be cutting interest rates anyway, but now the inflation numbers are likely to be more problematic for a period of time. The Fed looks at this as a traditional tax hike, not a persistent rise in tariffs, in inflation from the tariffs. But the risk is that the companies are getting a little bit used to passing on higher prices to consumers. There could be some profit-led increase in prices where it's not just the tariff, but it's the final product that sees the price increase. So the Fed's got to be really concerned about a whole range of issues. We think they'll prioritize the growth and bring rates down to something that's closer to neutral, as opposed to one that at this point is still, moderately restrictive, especially if, as we point out, the labor market weakens, as we think is pretty likely over the course of the balance of this year.
Kurt, over the weekend, the president once again was jawboning the Fed and also called the Fed stubborn, called Jay Powell stiff. How difficult does that make Jay Powell's job to cut in general? Because doesn't it look political, not policy-driven, that he's placating this White House?
Yeah, I mean, if the market were thinking something else, maybe that would make it more difficult. Jay Powell has done a great job all throughout his tenure of remaining apolitical. And I think that is the tone that he brings to the committee, and that the committee will be looking at the data. They just don't have the data yet to make these moves. I agree, pushing out what the market is expecting. June seems a little too soon. We won't see the erosion in the data by then. But come September, I think this decision is not going to be as difficult.
Well, what about the totality of the data? What about all the soft data? What about the anecdotes they're hearing from their districts? Isn't that showing that there is concern that growth is weakening?
Sure. Yeah, I think that's right. Yeah, the survey data has been across the board weak, but it has to show up in consumers on a buyer's strike or the labor market data actually where you're seeing companies fire workers. That's not there yet. And so when you have inflation at this point, which is still a little bit uncomfortably above target, it's still moving, it's moving in the right direction, but with the prospects that it doesn't get back to that level, then maybe staying on hold, waiting to see what happens with the tariffs. I think that's a key issue. Like, we haven't talked about you were talking about with your earlier guest with Kate about the prospects for, bringing down some of these tariff levels. I think that's very much in play. You think about how this intersects with another key macro issue, which it doesn't get a lot of sunlight, but it's the reconciliation process. They're going to need a lot of revenue for that in order to get those tax cuts across the board. You don't generate revenue from tariffs if in the process of having tariffs at these levels, you're destroying the imports and the economic activity on which these are based. So, I think there's something of a circularity here with regard to these. This is initial salvo, but do they come down over the course of this year? I think that's very much a likely story. Where should we be looking? Absolutely at China. I mean, almost everywhere else, tariff levels are reasonable. It's the China levels that I think are the real big concern.
What are they coming down to? So right now, north of 100%, 140%, whatever it is. Are they coming down to 50, 60, 70? That's very different than coming down to 10.
Well, some analysts even say that 145% or 60%, which the president pretty much was leaning into and promising on the campaign trail, still also means a trade embargo between these two economies.
Kurt, this was thoughtful. Right. It's good to see you, sir.
Good to see you, too.
Thanks for being here. Thank you. Kurt Ryman there of UBS. Equity futures then negative by 0.8%. Lots to talk about. The prospect of trade deals as soon as this week, but no talk scheduled between the President of the United States and the Chinese leader Xi Jinping, which is important, I know, to many of you. Up next on the programme, we'll get the thoughts of Chris Harvey of Wells Fargo, Henrietta Trays of Veda Partners. We'll catch up with the former St. Louis Fed President Jim Bullard and Kathy Jones of Charles Schwab. The second hour of Bloomberg Surveillance up next.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
In 2000, post-Napster, generally everybody wrote off the recorded music industry, including the investment community. And I didn't mind that chapter because then I got left alone. And actually, I think out of that period, we started to create better art because the pressure wasn't on from the technology to be the most powerful chapter. And then iTunes came in, and iTunes, to Apple's credit, did have a boutique taste mentality about the store, which meant that I think they understood. I can tell you from that period that the artists that came through were of a very high quality because it was encouraged to be boutique. Now, ironically, this chapter has made us more money times 5 than the iTunes chapter and the post-Napster chapter. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world, and so that has been very lucrative as a business.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Asia is at the forefront of some of the world's biggest.
Alright, looks like gold's starting to run now, guys. Yeah, man, your gold's running. Pound is in profit, euro's in profit, gold is in profit. Now we just gotta make some good money, man. Everything's in profit, to be honest, today generally, but I just want to make some money today. So yeah, just gotta be patient, man. Euro's about to break this high, aiming to break this high, to be honest. In euro could have a crazy day up, but yeah. Gold, I don't know, man. I'm waiting for this to go down. We're in a short. Remember, this is like, it's like a low, it's like a high RR kind of trade, you know. Honestly, the stop loss could be tighter than this. If I get out, I'll tell you guys. But yeah, the stop loss could be tighter than this. I just wanna let it breathe a little bit just in case. But yeah. I think we're gonna drop nicely on gold this week. It's gonna be beautiful. But for now, pound buys and euro buys doing good. This is interesting. Very, very interesting on gold. It might start to consolidate. And if it does consolidate like this, it might be a good short. Just to let you guys know. If it continues, it's probably not a short from here. We might have to take it at the next level, you know. But this pound is pumping. You know, euro is pumping. You know, but gold, it's a bit sticky, man. It's a bit sticky. But yeah, it's a bit sticky on gold right now. There could be a chance we just keep going up. But like I said, I will be taking this again on gold if I do get the opportunity to. So yeah, man, we might have to lose 1, 2, 3 times on the gold, but if we get it once on gold, like it's gonna be amazing. And you've seen the trades on gold, man. You know, yeah, like we lose a couple times, maybe sometimes, but then if we win, we win big. You know, we lose small, we win big. That's what it's about, you know. And if it is from here, then bro, boy, we gotta be making a lot of money, man. Gonna be making a lot of money, man. A lot of money. A lot of people are gonna be very happy. A lot of people are gonna be very happy. Come on, man. I'm like $200 off passing my FTMO challenge. It's so stupid. I'm just waiting for this to finish and I'll pass my FTMO. I don't know if you guys know what an FTMO challenge is, but yeah. Oh yeah, this is nice. This is nice. It's a nice breakdown. This is a nice break in gold. But yeah, I'm gonna go stretch, put the news on, and yeah.
No plans.
No, but Jonathan doesn't need to be talking to him this week because hasn't he told us every week that he's been talking to him? So it's still a bit uncertain the last time Xi Jinping and Donald Trump got on the phone. And I don't think it's been since April 2nd.
Who's talking to who and who's asking for talks? We'll try and settle that later this week. Maybe. Equity futures on the S&P, negative by 0.75%. Coming up this hour, Chris Harvey of Wells Fargo with stocks notching a second straight week of gains. Henrietta Trades of Veda Partners as President Trump says some trade deals could come this week. And the former St. Louis Fed President Jim Bullard on the FOMC's tariff and Trump tightrope. We begin this hour with stocks lower following the longest winning streak in some 21 years. Investors awaiting possible trade developments and a Wednesday Fed decision. Joining us now, Chris Harvey of Wells Fargo. Chris, good to see you, sir. Good morning.
Good morning.
You said it a number of weeks ago. We had a crisis of confidence.
That's right.
Last month. Have we addressed that crisis of confidence?
We've addressed it. So the big issue was the administration hearing the feedback loop from the markets, from individuals, from people in Congress? And the answer is yes, they've heard that, right? And they've adjusted their behavior. That's a good thing. To your point about what does a trade deal look like, that's a big question, right? So what we're saying is, hey, you're at the high end of the range. If you get some granularity on a trade deal, yes, we can break out at the high end of the range, but you need granularity. And what does that exactly look like? That's the big question. And with who?
I speak to economists, and they're still worried about the hard data catching down to the soft. I speak to investors, and they're willing to look through some of it, focused on the forward look offered by the policy moves down in Washington. How would you weigh one versus the other?
You can look through the data if you start to have confidence that we're moving forward and we're making big granular gains with folks in Asia, folks in Europe, North America. If you believe in that, you'll look through the data. If you think, this is kind of a hiccup and we're back to tariff, then you're not going to look through it. It's that simple.
Trade deals might happen with most of the trading partners, barring China, though. How do you look through any of this when you don't know how the trade deal is going to look with China and where that final rate is going to settle on?
Yeah, so I would agree with you that China, the administration believes or seems to believe that China's the existential threat. And so you really don't want to deal with them. I think a lot of the rhetoric around China and the U.S., that's all that is. I'm not expecting anything really positive. But if you do get some positive or constructive development from Asia, from the EU, from North America, you can start to make some real gains, and you're not as worried about the economy. The other thing that I think the administration is saying is, hey, if we're going to disintermediate China, you're going to get some of those spoils, you're going to step up to the plate and help us out, and that's a good thing. And the last thing I would say is that the underlying economy, while it's slowing down, wasn't in a bad place before all this started.
You sound positive on trade deals. Do you think we're past peak uncertainty?
I think we're past peak uncertainty, and what we do is we look at it this way. He went very hard very early. In order to get that pressure back, I think you'd have to put us into recession. I don't think this administration wants to go into recession because what it would mean a higher deficit, more job losses, you'd have a negative wealth effect, and popularity wouldn't be rising as you get closer to the midterm elections. So I think we have, but it's not smooth sailing from here.
The stocks have recovered at the index level on the S&P since April 2nd. The dollar has not recovered. As you look at things right now, given the dislocations of the last month, are there certain things being left behind, certain things you want to lean into?
So our thought process isn't that different. We wanted good risk rewards. We want to balance that with some low vol or defensive. The thing that's new and different to us is at the margin, a lot of the AI trade is looking a lot more attractive. A lot of these names are in a bear market. The risk rewards, valuations have come down significantly. And when we talk about the AI trade, it's things in utilities, it's things in industrials, it's things in tech. It's not just tech alone. And so what we're seeing on the margin is that AI trade or the risk reward is becoming a lot more attractive. And that's what we're seeing, becoming more positive on the margin.
Outside of the AI trade, can you say the same about the rest of the market? At the index level, if you're looking at the S&P this morning, the risk-reward profile of the S&P 500 going into a couple of weeks of important trade negotiations. What's that profile now?
The profile, so you can go one of two ways, right? If you look at the second half of the year, do you believe the Fed's going to be cutting rates? We do. Do you believe that the economy is going to go in a slowdown, but not, right? Let's talk about recession for a second, right? If it's a recession because balance sheets are upside down and backwards, you can't pull out of that. You need the creative destructive process to stop that. Here, what we're doing is we're repricing risk, we're repricing expectations. You can pull out of that so the economy can improve. We haven't had M&A or real M&A in a while. We've talked about that. We haven't seen the benefits of the deregulation. We can talk about that. And then again, if we start moving from tariffs to taxes, right, we go from stick to carrot, it's a lot different market. Right?
But how quickly do you think they actually get this tax bill over the finish line?
How do I think it, or when do I think it?
When do you think?
I think you have to get something granular by, say, January, because nobody wants to stick around in D.C. in August. The other thing is, I also think you have to get...
True. That's a true point.
That's the practicality. The other thing is, I think you have to get it done. You have to get that vote on by fourth quarter, right? If you're going to get it done by fourth quarter, you're going to wrangle, you're going to push, you're going to pull, and all that has to happen in third quarter, in September, October, and then the votes start going November, December, and it gets signed in December.
John's asked this question before, which is a really good point. Is a removal of a headwind, or do you think we're going to see a tailwind? Because they're talking about everything like no tax on tips, no tax on Social Security.
I don't think it's a tailwind, right? It's just not big. For our view, it's just not big enough. It's just a removal of a headwind. And that's positive because you've got some really big headwinds in the form of tariffs and taxes.
But it's baked in.
It is baked in, but again, if you believe that deregulation really, you haven't seen the benefits of deregulation, you're going to have taxes out of the way. What are we talking about? We're talking about uncertainty. Suddenly we have certainty, now we can price things a lot differently.
The Treasury Secretary writing over the weekend in a Wall Street Journal, Scott Bessent, saying this: the American people should expect to hear the engine humming during the second half of 2025, which is basically what Chris Harvey just told us then.
And he's basically just talking about the fact that you have to look at all these policy proposals together. He talks about all the time this three-legged stool. And right now, everyone's only been talking about tariffs. He's like, wait till you start talking about taxes. Wait till you start seeing deregulation actually usher itself through the economy.
We'll see more jobs, more manufacturing, more growth, a more robust national defense, higher wages, lower taxes, less burdensome regulation, cheaper energy, less national debt, less dependence on China. Is all of that achievable in the back half of this year?
That's a lot. Is all of that achievable? Probably not all of that's achievable. Some of that is achievable. And as long as we make progress on a good chunk of that, I think we're in a pretty good spot. But yeah, that's a lot to do in a very short period of time.
He adds also one more point to that list, which is also with a strong dollar.
Right.
How is that possible?
Don't know. So what I do know is that they've talked about lower oil. We have lower oil. They've talked about lower rates. Rates appear to be coming down. I do think we're going to be cutting in the second half of the year. Dollar, I don't know how you get a stronger dollar from here. It's questionable. You could, right? Because coming into this year, everyone thought the dollar was strong. It rolled over. So maybe expectations are wrong once again. We'll see.
Can we finish on energy equities so I can mention what's happening in the commodity this morning?
Sure.
Brent is down, WTI is down, right. OPEC Plus is pushing. I should say the Saudis are pushing more supply into the market. How difficult are things on the equity side in energy?
So we've been underweight energy for a while. It's performed pretty well, partly because a lot of the stocks are value stocks, but now they're beginning to underperform. I would say on the energy side, it actually hasn't been a bad year. You've seen some pretty good runs on the energy names, but I think that's more because of the value stock and their characteristics than the underlying fundamentals.
Chris, it's good to see you, as always. Thanks for dropping by. Chris Harvey of Wells Fargo, only a month ago discussing a crisis of confidence in this market, a big turnaround in the past few weeks.
Big turnaround, what you're seeing in this market. Basically, you started April, almost how we ended April, even though there's tremendous amount of volatility. The Treasury Secretary said something to me that I'm reminded by when Chris Harvey speaks. The VIX already peaked. Peak uncertainty may well be behind us.
I think Bessent's traded this quite well over the last month. If he was still trading, I'm not implying he is trading, just saying that he's traded it quite well if he was still trading. Let's get you an update on stories elsewhere before we get into trouble. Here's your Bloomberg Brief with Yahara Anand. Hey, Yahara.
Hi, John. Taiwan's dollar surged by the most in over 3 decades on speculation exporters are rushing to convert their holdings of U.S. dollars to the island's currencies. Traders are betting that Taiwan's central bank may be allowing the currency to appreciate ahead of a U.S.-Taiwan trade deal. Strategists also point out the currency's strength is being amplified by life insurers rushing to hedge their U.S. debt holdings. And Spain's high-voltage electricity grid suffered more generation disruptions than previously known ahead of the country's largest ever blackout. That's according to the Spanish government. It's now seeking to identify the plants where generation collapsed and why, and says determining the cause could still take months. And President Trump said he would further extend the deadline for TikTok to be sold to a U.S. owner if needed. He said he has a warm spot for the app and would like to keep it available for Americans. The president has already extended the deadline twice for ByteDance to divest its U.S. operations. That's your Bloomberg Brief. John?
Yahara, thank you. It's just like a rolling extension. What kind of incentive is there for the Chinese government to give the green light to sell when they know they'll just keep receiving a rolling extension from the president?
There's no incentive right now unless potentially it comes down to trade negotiation and tariff rates, and they are very concerned. I just have to say, what a 180 from Donald Trump.
Huge.
First administration, this was huge national security as we have to get rid of it. Second administration, well, I have a warm spot. It helped me win the election, I think. Maybe we try to keep it around.
Complete U-turn on this issue, that's for sure. Up next on the program, President Trump setting the deal.
At some point in the next 2 weeks or 3 weeks, I'm going to be setting the deal. We're meeting with almost all of them, including China. And at the end, I'm setting the deal.
Up next, Henrietta Trays of Veda Partners, live from New York City this morning. Good morning.
the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets
with the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Important data point coming later this morning. ISM services, 10 a.m. Eastern time. So look out for that following a pretty robust, resilient payrolls report on Friday. Upside surprise 177. The median estimate in our survey was 138, and the report elsewhere pretty solid, all things considered. This morning we back away. We're down by 0.8% on the S&P, following a phenomenal run of gains on the S&P 500, 9 straight and up by more than 10%. That data on Friday unlocked higher bond yields, particularly at the front end of the curve. 2-year yields were much higher. We're lower this morning by 2 or 3 basis points, around 380, 379, 72. Under surveillance this morning, President Trump setting the deal.
At some point in the next 2 weeks or 3 weeks, I'm going to be setting the deal. We're negotiating with many countries, but at the end of this, I'll set my own deals. We're meeting with almost all of them, including China.
All right, guys. It looks like we're almost about to hit TP on pound and euro. Just watching it now. Gold is ranging, to be honest, right now. But this pound and euro, we're about to hit TP. Euro's still got a little bit more. It makes me think, should I extend the TP? Because I do think we could go higher on this pound and euro. But yeah, stops should be to break even right now. Like if this goes back, then this, yeah, I think stops should be to break even. Be on pound and euro trades. Yeah, like these trades are running like nicely. So I don't think we should take a loss on this. Oh wow. Yeah. Yeah, so I don't think we should take a loss. So stops to be, please, guys. Stops to break even. Well, stops to the entry that I put on Telegram. That's what I mean. The stop loss should be there now. But yeah, these trades are doing really well. Really well, really nice trades, like really nice trades. I think the pound is 40 pips running. It's already running 40 pips, this pound dollar. It's nice. It's nice, guys. It's really, really nice day today. We just gotta wait for gold, man. If gold has a nice bearish candle, we could be in the money, man. We could be in the money. It's a good day today. Good day. Yeah, it's a good day. We're making money. That's what matters. If this gold goes down, it'll be even better. But right now we're in a pound and euro. Pound and euro. Let's go, guys. Let's go. I think I should pass one of my FTMO challenge accounts. All I need is just this euro to go a little bit higher, and I'll be past. Yeah, I've almost passed it. Yeah, this could be it on gold, you know. Mm. Alright, just waiting. Okay, gold, come on gold. Yeah. See what happens here. Mhm. Mhm. All right. Looking good on gold, looking good on gold, looking good on euro, looking good on pound. Guys, we're in the money, man. We're in the money today. Have to believe in your trades, man. This, I think, on gold was the manipulation. I'm hoping this was it. So sometimes I like to spot these manipulations, but you see this break of this high right here? That was probably the manipulation, and now we're gonna probably break this low over here and go down. Um, I think over here somewhere to 96. 96 is a possible target, but like a scalping target if you want to get out. I think this is gonna go down, guys. Yeah, I don't know what that means for the pound. I hope the pound keeps continuing, euro keep continuing. But this gold, it looks nice, man. Looks nice for the downside, you know. Um, yeah, it looks nice for the downside. Trying to make some good money today, guys. But yeah. Um, which FTMO challenge is it? I just bought a 100k challenge. Um, yeah, I bought a 100k challenge and from FTMO, and it's phase one. So I had to make them 10k, which is 10%, and then phase two is make them 5k, I think. So yeah, I don't really do these challenges ever, actually, ever. But um, you know, I was just seeing the amount of money people make from these payouts, and I was just thinking to myself, bro, like I could do this, you know. And it's good to like de-risk because right now, I'll be honest with you, like I don't want to risk any of my own capital. Like I'm still risking my capital and everything like that, but if I can risk like, you know, an FTMO money instead of my own money, that's better, man. I feel more safe, you know, doing that. So like managing other people's money and stuff, it's just kind of like the way I want to go towards the future, I think. Because the money I have right now, I could use that for something else, you know, instead of just keep it in my account. Does that make sense? So I can diversify a portfolio and put it maybe into stocks or other things that, you know, I can just leave it on that, you know, and I can trade FTMO challenges or whatever like that, and make money from that, you know, um, or buy like, you know, assets with it, like physical assets that I want to buy more of. Um, yeah, you know, if I don't need money to trade, then yeah. Yeah, I think it's good, but the only thing is with these FTMO challenges, bro, it's like it's ridiculous, man. It's like the rules are really annoying, so you're probably gonna fail, and they make money out of you failing, That's how their business model works. And there's nothing wrong with that, because they do give you, it's a deal, Like if you pass, we give you this. If you fail, then you just you're not getting your money back. You know what I mean? But that's how they make their money. That is how they make their money. So, and most people do fail, like even me, bro. I'm gonna be honest with you. I've failed a couple times, on those challenges. That's why I don't really like them because it's not really the best for my rules and stuff. But I'm approaching it in a different way. Like I have like good trades, but it's just because of my strategy and stuff. Like I use on my personal account when I started doing it on the FTMO challenges, it wasn't doing that well. But I just tweaked it a little bit, and it's doing well now. It's when I tweaked it, it's doing well. It's passing FTMO challenges. So yeah, it passed this FTMO. I'm gonna start another one actually soon. Once I get a payout or something. Not even a payout. Once I once I pass the second phase, which is phase two, which make him 5%, and then I'll probably do another one because then I'll have an account. Um, but yeah. I've wasted a lot of money on these FTMO challenges. I'll keep it real, man. In the past, I was like, I tried a couple times and I was just like, bro, fuck this, bro. I'm not wasting any more money out of this, man. Because I actually make money on my live account, but I don't make money on any of these FTMO challenges because I keep failing them. This is before, But now I just recently got back into it, maybe like 2 weeks ago, like literally 2 weeks ago, because I'm just seeing there's loads of opportunities. I know where to put a good stop loss for this stuff, and yeah. And I just realized the trick to passing an FTMO challenge. You see me, I like to take my time with trading and grow an account like over time. But the problem with FTMO, like it kind of rushes you a little bit, because you want to pass the challenge ASAP, Because as soon as I buy it, I kind of just want the account. I don't want to be trading a demo account. Trading a demo account is just, it's just dead. Like, why would you want to trade a demo account? And that's essentially it, to be honest, man. I don't want to trade a demo account. And yeah, I just want to get to the stage, but you kind of just don't have to rush it too much and stuff. And yeah, there's a way to it, man. But yeah, I mean, it's not a bad thing to do, It's not a bad thing to do. This thing's pulling back. This is making me think we're gonna go higher. You see, when this pulls back like this at a high, it's likely to break this high. I've just seen this so many times before. Like when it pulls back next to a high, everyone's got their stops here and here. It makes me think we're gonna go higher. Now, should I extend my TP? I could. I just don't care, to be honest. I just kind of want to get my money and get out, and then focus on this gold trade going down. Cause I feel like I can't lie. I did when I broke this high. I put more lot size into this gold, because I do see this divergence, and it's starting to look like a more probable trade on this gold. This is something I've seen before on gold, so I did put more lot size on it now, and I'm kind of confident on this gold, if that makes sense. So yeah, I'm just more confident on this trade. So I'm actually risking some. I'm actually gonna probably tighten the stop loss to around here, 3332 maybe. Because I put a bigger lot size on, and I do think it's a good risk to reward. Like if it goes above this level, I think it's probably gonna go a bit higher. Maybe break these highs or something like that. But yeah, it's a good risk to reward. The RR is good. I can make a lot of money from this. A lot of money. A lot of money. Even if I scalp it to here for a day trade, it's still a lot of money. Still a lot of money. And when I scalp something like this and take it to here, I'll probably get back in if it pulls back higher up. But if it pulls back higher up and breaks this high after going down, it's likely that it's gonna go higher up, which is okay. Another thing you could do is, because we got a really good entry, and if it goes down, we just put the stop loss to break even, and it becomes a risk-free trade, Yeah. It becomes a risk-free trade. But yeah, man, euro. This pound dollar almost hit my target, man. Literally, like my target is actually over here somewhere. Isn't it really to break this high? Actually, somewhere here. Don't know why I've got that marked out like there, but literally my target is somewhere there. Kind of hoping that we break that. But I think we're gonna break this high over here, to be honest. Which means we're probably gonna go to my TP2. My TP2 is which I'm not even like. Which is another 30 pips from here. Like there's another TP somewhere here, literally just above this white line. I've got it marked out on another chart, and it's probably gonna go here or even higher. But my aim is not to really. I don't know, man. I just want to make my money. Get out. Yeah, this is the thing, man. Let me put my stop losses to break even, I think. Because if it goes back, then, yeah. Yeah, my stop losses are going on the break even. Because I'm not really trying to take a loss on this trade. EU. Yeah, I shouldn't really take a loss on this trade, but that's why I want to put my stop loss to break even. It's annoying because we almost hit the TP as well, and now it's pulling back. Alright. It doesn't really matter though, because the gold trade is also going down as well, so it's making up for it. Yeah, this is so because the pound and the gold's related, and I think I'm right on this trade, but I don't think it's gonna go all the way down here. Maybe it might do something like this, and then like that, which means the pound might do something like that as well. You know, this might just be pulling back, then going higher. So what we gotta do, we just gotta get the scalp. We gotta wait for this break or low, and then we get the hell out, man. You know, we got news as well later on today, so yeah. This might be just a scalp, this trade. Honestly speaking, we might just be scalping this. Yeah, we might be just scalping this, to be honest. But we got a really good entry, you know. We got a really good entry on this trade. Stops to break even on everything else. Yeah. I mean, we're looking good on gold. Looking good on everything, to be honest. Yeah. But yeah, I might just take this as a scalp and get the hell out, man. On gold. Because this could be a good entry if I'm right. It could be the high of the week, whatever. But am I likely to be right? No, because catching higher weeks is very difficult, especially on a Monday. Yeah, and there's news and stuff. So yeah, this is probably gonna pull back a little bit. What we need is just a little bit of a pullback. I think we just need to pull back, and then we get out. We get out on a push, I think. To me, that might be it. We just gotta wait and be patient. Oh yeah, look at EU's coming back. Oh fuck. Yeah, EU's coming back to entry, I think. I think EU might take our entry out. Oh, this is the thing, man. pound is gonna go much higher actually. Just looking at the chart, which means euro probably is gonna go much higher too. But yeah, once it hits the TP, I'm just gonna get out. Because I am looking for sells on pound and euro, by the way. The only reason I bought it today is because I'm anticipating like it's gonna go up a little bit, you know, that kind of thing. Same with gold. I've been looking for sells. We missed the buys today though. I would have bought it if I saw what it did today in the morning, but honestly speaking, I was just yeah, I was just tired, man. Honestly, I woke up late today and yeah, I was very tired, you know. Yeah, just gotta be patient, man. I think we got this.
And at the end, I'm setting the deal. You keep asking the same question.
Do you think he has acknowledged sufficiently the potential that this goes okay, this goes right? In fact, it could be good.
I haven't heard people talk about it very much. I think actually this is, yeah, it can go two ways. It can go very badly, for sure. You could have, let's say the Chinese just throw up their hands and say, you know, we just can't do it and we're going to go some other direction. But I don't think they're going to do that. I think all the incentives are for them and many others to come to the table, offer something. They probably have been too protectionist over the years. They have had too many non-tariff trade barriers. They can probably put something on the table that would get a deal, and that would be better for everybody. You'd get faster growth globally. You'd get faster growth in the U.S. And it would be a good outcome. So there is some upside potential. That's why I think you've got the stock market sniffing this out and moving up 9 sessions in a row.
This is more of a constructive view on what the administration is trying to do. Do you think we could see the Fed potentially offer two versions, dual guidance, like we've seen from some companies?
That's been discussed. Scenario analysis is a good thing to do in a time of high uncertainty, and then you could kind of map out some potential outcomes and then let the market put its own probabilities on those various paths. It's hard to get the committee to sort of agree on, well, which scenarios should we have and so on. So it's not the easiest thing to do, but if you look at older staff guidance that goes into the meeting, they have scenario analysis in there. You can look at the ones that were released 5 years ago or so. So they do that. It's kind of hard to talk about it other than individual members talking about it.
When we have of course, the Treasury Secretary talking about things like strategic uncertainty, how difficult does that make the Fed look, not just the next few months, but also this entire 4 years of the Trump administration, where that is going to be a feature, not a bug?
The strategic uncertainty, yes. Part of a negotiation is to stake out a extreme position initially and stick to it, and that's how you get good outcomes from a negotiating perspective. From a monetary policy perspective, you always want everything to be perfectly smooth and no uncertainty at any point, and so there is a bit of a clash, and that's just the way it's going to be, I think, for the next 4 years.
Jim, what's on your dashboard at the moment? We mentioned that we caught up with the Port of LA director just before the weekend on Friday, and he mentioned the amount of volume that was coming off arrivals this week. And we were trying to work out the next dominoes to fall from there, whether that started a process which could spill negatively into the economy. What's on your dashboard at the moment for you personally?
Yeah, I think these.
All right, so I just checked something because I've taken this exact same trade before. On gold. Hold on, let me mute this. Yeah, I've taken this exact same trade on gold before. It's funny enough, I've taken this exact same setup on gold before on this trade, and this is likely to break down. So yeah, I don't know if it's gonna hit the full TP, but I think we're going to go back to here. This support here maybe. So yeah, or at least half this move that it went up. So yeah, man, get ready to cash out, guys. I think we're looking good. But yeah. If this does hit stop loss on GU or EU, well mainly EU to be honest, GU is kind of far, but if this hits stop loss on EU, I will be looking for re-entries to get back in, for the buys if I see a re-entry, just to let you guys know.
Even though it sounds like this president, I would even say Biden in some respects was also protectionist in some moments, other countries are also protectionist. You can find industries that they are desperately trying to protect. Japan, if you think about it, when it comes to autos, or the European Union when it comes to agriculture.
Equities this morning, negative by about 0.9% on the S&P 500. With an update on stories elsewhere this morning, with your Bloomberg Brief, here's Yahara Anand. Hey, Yahara.
Hi, John. President Trump says he's planning to impose a 100% tariff on movies produced overseas. He says foreign productions are a national security threat, claiming other countries use films for messaging and propaganda. It's unclear how the tariff would work, with many films involving production work in various countries. President Trump also says he wants to reopen the infamous Alcatraz prison in the San Francisco Bay. Trump said it would house America's, quote, most ruthless and violent offenders, and that he plans to work with the Bureau of Prisons, DOJ, FBI, and Homeland Security to rebuild and enlarge the prison. Alcatraz was closed in 1963. And in sports, the Golden State Warriors are moving on to the second round of the NBA playoffs after beating the Houston Rockets in Game 7, led by a 14-point fourth quarter from Steph Curry. And in hockey, the Winnipeg Jets advanced to the second round of the Stanley Cup playoffs after a thrilling Game 7 comeback win in double overtime over St. Louis. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in the next hour. Up next on the program, a gift from the Saudis.
Prices are down for oil. Prices are down for all energy. Prices are down at tremendous numbers for gasoline. I have it down to $1.98 in many states right now.
Up next on the show, we'll catch up with Bloomberg's Anthony DePaola from New York City. You're watching Bloomberg TV.
What makes it India's time?
It's as women who are going to transform India. I truly feel that the time for Indian women has come. They're not really breaking glass
ASAP Tobes,
ceilings,
yeah.
but they are redefining.
My EU hasn't
You know,
hit the
whether
break
it is
even.
in
Sorry, I couldn't.
sport,
Sorry, I
whether
didn't see
it's
the
in
chat.
medicine, whether
Give me a second. EU's nearly at break even, about possible retest, and then yeah, I think it's gonna go up, bro. It hasn't hit break even yet. Like my break even is over here, so that's where your break even should be, or your stop loss or whatever. The problem is I am scared it might break this low. Yeah, it might. Yeah, I wouldn't put your one at break even. I'll put it at my where I'm in. Does that make sense? So maybe make your stop loss like shorter, if that makes sense. So don't. Yeah, yeah. Put it at my entry. Put it at my entry. But I don't think, bro. I actually don't think it's. I don't think it's bearish. I think it might do something like this and then this, bro. That's what I'm scared of. So I don't know if it was a good idea to put my stop loss here at break even, to be honest. But if it does hit it, I am probably gonna look to get in. It'll probably like somewhere here in the middle. But it might not hit it. It might not hit it, to be honest. But it's gonna take out this high. I'm sure. I'm not kind of sure of it. What GU doing? GU's still going up. You know, GU's still looking good. This one's still looking good. Gold's kind of like just doing nothing. I feel like this is gonna have a big red candle soon, but we'll see on gold. But I have a feeling this GU and EU want to go up, but it's just, I don't know, man. We might hit entry. But gold looks good. I actually added lot size on gold because this is I'm kind of more confident on this trade on gold, by the way. I was saying earlier, I don't know if you were listening, but I'm kind of more confident on this gold trade because I've seen that trade before. Yeah, I've seen that trade before. I really want to put a high lot size on this, like, but the problem is it's just like I don't want to risk right now on a Monday. It's just a Monday and it just doesn't feel like it. But like I do think this is gonna come down a little bit for a scalp. I don't know if this is gonna go all the way here, to be honest. That's the only problem. But this is a very, very good entry for a short, in my opinion. But I'll reevaluate when it goes down. But yeah, let's just hope this euro dollar doesn't hit the stop loss and keeps going up. It doesn't hit the break even. Because it's doing good, but we just need it to hold a little bit more, you know. Yeah. But yeah, put your stop loss at my entry if you were gonna put it somewhere. Or put it at the original stop loss, honestly, bro. If you think it's gonna hit it and go up, because that's what I think is gonna happen. Do that, you know. I should have probably like just left it normally, but I kind of moved it now and I just can't be bothered to move it back again. But if it does hit it, like I told you, I'm probably just gonna get back in. Yeah.
And create
market. They're getting the group to put more oil into the market, hit those countries that have been overproducing a little bit with some lower prices. OPEC reacts better when they're under pressure, when things are going poorly. So if they can get a little bit more cohesion into the group, perhaps they can continue this cooperation in terms of managing the market as they go forward. But that's not the only thing OPEC is doing. By adding more production, they're looking to get back some market share, which they have given up to other producers, producers in the Western Hemisphere, the U.S., Latin American producers, some African crude as well. They've given up market share by holding those barrels off the market. And then, of course, you've got Trump coming next week to the region. So this is also an effort to kind of help him get on the good side. Perhaps they're looking to avoid tariffs. They've got a long wish list of things that they would like to get from the U.S., including some security guarantees, some more favorable treatment on a civilian nuclear program. Those are all things that are in the works. Maybe they think this will help those discussions, Jonathan.
Anthony, this might help the president at the moment, especially with consumers. But what about the shale patch? How much is this a double-edged sword?
Yeah, that's right, Emery. This is going to hurt the shale patch because as the WTI prices go lower and lower, depending depending on the individual producers, some of them get to the point where they're not making money anymore. And the shale patch has been really intent on returning money to the shareholders. So when they've got higher oil prices, they are spending on new rigs, but they're making sure that they're able to give that money back to the shareholders. So as we see the price get lower and lower, that's activity is going to be even more constrained. It'll take a little bit of time to see that coming through, but we have seen some lower rig count numbers for the shale patch. So that is going to impact. And then we've got that desire by the Trump administration to increase American energy production. Well, this will impact that. On the flip side, there's still a lot of gas coming out of the U.S., so that will help overall barrels of oil equivalent in terms of that increase.
Anthony, appreciate the framing. Thank you, sir. Anthony DePaola there of Bloomberg out of Dubai, and that region's going to be a big focus in the coming week when the president heads over to the region.
That's right. He'll be going to the Kingdom, he'll be going to Qatar, and also the UAE. It's so interesting what OPEC is doing, because at one hand it is an olive branch, but Torsten Slok over the weekend, when OPEC came out with this, said, look at what the Dallas Fed asked these energy companies about break even. We're now below that break even price, and they're talking about potentially maybe layoffs in the energy sector in America because the prices are just too low to be sustainable.
Crude's down 1% this morning, down 20% so far year to date. Joining us now is Kathy Jones of Charles Schwab. Kathy, how much comfort will this drop-off of energy prices bring the Federal Reserve later this week?
Well, probably not too much. Obviously, it's a help to have energy prices come down, but it does also, the Fed does also have to focus on the tariff side of things. So, and that's still unclear, right? We still don't know what those tariffs will be, if they will be implemented, how broad-based they would be, and how long-lasting they would be. And one of the criteria that Powell has laid out for changing policy for cutting rates is clarity around tariffs. So energy costs coming down certainly can be helpful in terms of holding inflation down, but they have to look across the broad spectrum and say, what are prices going to be, or what is the rate of change in prices going to be 6 months or a year from now?
Kathy, over the weekend, the president was signaling that deals are on the way. What's your base case when it comes to the tariff rate for all trading partners and then, of course, for China?
We don't have a base case because we don't have any deals yet. We don't have anything to base it on. So the deals so far that we're talking about are deals that are already in place, like with South Korea. So, until we get deals, we know that, or we at least say 10% across the board. Maybe that will stick. We'll deal with that. But we don't really have any framing around what these deals are going to be like. And given how long it typically takes to make a trade deal, I'm not sure we'll have that clarity in 6 to 12 months from now.
Kathy, with that in mind, do you have a particular preference across the yield curve? When you look at treasuries, you think about the risk, the lack of clarity we've got on so many important things. Where do you want to sit?
Yeah, we like the 5 to 7 year area. We don't want to be real short duration in cash because we do see the economy slowing. We do see inflation coming down. So that's positive for intermediate to long-term yields. But there's so much that we don't know that we don't want to be really long in this market and open ourselves up to that kind of interest rate volatility. So intermediate term, 5 to 7 years, high quality. You're looking at yields 5.5% in the investment grade corporate market with a 6 duration. We think that that's a pretty attractive proposition.
Priya Misra of JP Morgan was on the program with us Friday. I'm not sure if you saw it or not, Kathy, going into the weekend. Priya said the 30-year bond was a risk asset, that it was risky. How do you perceive the risk associated with sitting on and owning the 30-year treasury?
Well, I guess if you're a pension fund or an insurance company with very long duration that you need to hedge, you can use a 30-year, but it's always been volatile. And I think it is certainly more of a risk asset now than it ever was before because of all this potential for foreign investors to pull back from investing in treasuries and the perceived risk of holding them given our large fiscal deficit, our inability to get our arms around that, and then our various policies towards foreign investors. I could see that it is risky, but it really is rarely used by individual investors. It really is something for a pension fund to use to offset its long-term liabilities. So it's not an asset we don't talk about the 30-year very often anymore these days. We used to, but not very much.
For good reason. Kathy, appreciate it as always. Kathy Jones there at Charles Schwab. The equity market's recovered. Some of the questions, though, continue to linger. The perceived weakness of the dollar haven. I think that question continues to linger, and the dollar weakness does too. We haven't fully recovered on the FX side of things.
Absolutely. When you see also a lot of trading partners and institutional investors on the foreign side dumping U.S. dollars. But over the weekend, what did the Treasury Secretary say in the Wall Street Journal? We will maintain a strong dollar policy. We're not seeing that play out right now.
A dollar weaker again this morning. DXY down by 0.4%. Up next, Stephanie Lang of Homrich Berg, Dana Tausi of the Tausi Advisory Group, Erin McLaughlin of the Conference Board, and Debbie Cunningham of Federated. From New York, the third hour of Bloomberg Surveillance. Up next.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates, complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
But what about the diagnosis? If the diagnosis at the end is worries about growth rates, how do you get from point A to point B? Why do you worry so much about that end goal of better growth?
Because if we can't grow, you're going to have a much more inflated debt to GDP and federal deficit. And that's not good for the economy. Growth is really critical. And I think what's underappreciated is what the inputs are to get to the growth number. And so we talked a little bit about productivity. I hope that we can continue to produce at 2% indefinitely on productivity. I think that would be great. But you got to make sure you have the other levers in place, I think, to buoy that. So if you look back over the last several years, we've had 8 million immigrants come into this country in the last 4 years. And that's helped growth. And by the way, that's deflationary.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
As we are seeing deals materialize, I think the market will pivot more towards growth.
U.S. assets are still
a safe haven.
The net trend is pretty strong. The challenge is looking forward.
The economy is still hanging in there in terms of the hard data.
We have momentum going into a difficult period, and the question just is, will this momentum be strong enough to get us through it?
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
There is some resilience in the U.S. economy. The payrolls report on Friday certainly speaks to that going into the weekend as we kick off a brand new trading week. Good morning to you all. The third hour of Bloomberg Surveillance starts right now, and your scores look like this, with equity futures on the S&P down by 0.8%. On the Nasdaq 100, we're down by 1 full percentage point, following quite a run on the S&P. 9 consecutive days of gains and up 10% over the period, the best run we've seen on a daily basis going back to 2004. In the bond market, 2-year, 10-year, 30-year, just a bit of quiet. Yields are down by 3 basis points on a 2-year, 3.79. Better data on Friday, unlocking higher bond yields going into the Federal Reserve meeting this coming Wednesday. Chairman Powell taking center stage, and the pressure once again building from the White House.
Pressure's building from the White House. You see the job voting once again over the weekend from the president, but he did say that this is a Fed that is stubborn, and he doesn't think they're going to move very quickly, but in a year he can replace him. So at the moment, we don't have to worry about a termination of Jay Powell. Tricky moment for the Fed, because the market is still trying to digest where policy is going. Trade deals, which one will we get? Potentially we're going to get one this week. Who will it be with? And then, of course, the lingering, more important trade deal is going to be with China. At the moment, the president says him and Xi Jinping will not talk this week, but he says that those rates are coming down. But coming down, Jonathan, to where?
It's difficult to provide an outlook at this point, particularly for the Federal Reserve. I'd go back to the speech that was delivered from the governor of the Federal Reserve, Chris Waller, and what he said in the middle of last month, a tale of two outlooks. And maybe they'll offer multiple scenarios. Maybe they will. And for that reason, I think for a lot of you, the most important testimony this week might come from the Treasury Secretary, Scott Bessent. Just how close are we to those deals? And please, define what those deals might look like. What do they include?
Well, I think you've been hitting the nail on the head all week and last week when you were talking about the fact that these are likely going to be purchase agreements. We already saw the Europeans come out and they're saying we're looking at buying 50 billion euros worth of goods. If this is agricultural products, soybeans, LNG coming from the United States. We know this president hates MOUs. He made it very clear in the first administration to Ambassador Lighthizer, never use that term. So it might be purchase agreements. It might be tiny deals, because to have a proper trade agreement, that can be months or years down the road.
The president's getting one thing he was looking for. Crude, lower, down again today. We're down by 1.5%, $57.40. You're getting the same emails we're all getting. Can you find gas for $1.98 anywhere in the United States?
I'm not clear what the president is talking about when he says he sees gasoline at $1.98. When I checked over the weekend, AAA, I believe it's a little bit above $3 when you look at the national average. Maybe there's this one gas station in Florida he passes that has $1.98. Maybe he's looking at the wholesale prices. I'm still trying to understand from this White House where, in fact, in America is there gasoline for $1.98. Let me know. I'm going to go tell my parents that's where they should go buy gas.
The good news is that either way, crude is lower. We're down by 1% this morning and down by something like 20% so far year to date. Coming up this hour, we'll catch up with Stephanie Lang of Homrich Berg after stocks complete a major turnaround. We'll catch up with Dana Towsey of the Towsey Advisory Group as Trump's tariffs hit supply chains, and Erin McLaughlin of the Conference Board on the importance of a China trade deal. We begin this hour with stocks lower after erasing post-April 2nd losses. Stephanie Lang of Homrich Berg writing, we're on borrowed time before the tariffs have a material impact on the broader economy. Stephanie joins us now for more. Stephanie, welcome to the program. Let's get straight to it. I want to pick up on that line. I think it's really important. We've heard from several economists that maybe last month's payrolls report was the last good one. Do you think the weakness could appear as soon as this month, as soon as next month?
Well, I think we probably have a little more time than that, but the essence is we are on borrowed time. We've had some pull forward of activity in terms of the consumer, businesses trying to get ahead of the tariffs, but eventually that's going to play out, and we know it. It's just a matter of how soon will we see it, and that's what we're concerned about in terms of how this will eventually play out unless we start getting some deals on the tariffs.
Stephanie, as you know, at the index level, we've seen a total turnaround for the equity market. Are there certain areas of the market where you think there's more capacity to absorb negative news if we do indeed get some through the summer?
Well, I think, in terms of the sectors of the market, there are some more resilient ones. Of course, we've seen in the earnings reports retail, travel really getting hit. So I think it makes sense to be a little more defensive at this point because we have so much uncertainty. Of course, consumer staples have been really strong, but they have high valuations, and healthcare is something that we're a little more bullish on, given that it's had tremendous earnings growth, and you also have some lower valuations there.
When it comes to the expectation for trade policy, you say we're on borrowed time, but are you seeing impact that the damage is already done right now, even though we're in the middle of this reprieve from the White House?
Well, I don't think we've seen the damage yet. You just start seeing it from the CEO sentiment data, which essentially, if you look at what they're saying, is that they aren't going to hire as quickly, that they aren't going to have the CapEx, and the consumers are in the same spot. Maybe they'll put off on that home renovation or those big purchases. But just last week, Apple said that they expect $900 billion in costs added because of tariffs. So it's an expectation that's coming on, and we're starting to see it in terms of earnings estimates moving forward. While this quarter has been quite strong in terms of where earnings have ultimately come in, if you look out the next several quarters, we are starting to see estimates come down, and ultimately we were at 15% in terms of earning growth for 2025. We're back at 10, which we still think is pretty good, but we expect it to come down if we don't see some resolution on the trade front.
How important then is it for the administration to push forward the other agenda items when you look at the policy perspective of the administration, meaning deregulation and the tax cuts or tax extension?
That's exactly right. The sequencing of the policies from Trump this year, we've essentially gotten all the drag on growth policy through tariffs, and we haven't gotten any of the pro-growth measures through the tax cuts and deregulation. In fact, deregulation was supposed to be a big spur to growth this year, and actually it's been quite the opposite. We're not seeing any deals coming through. So essentially, we're getting all the spinach with no dessert so far this year. And so it's critically important not only to see what this tax bill can do to spur growth, but really help that sentiment from both the consumers and the CEOs, that they can settle down and feel a little better about the trajectory of the economy and really start, hiring, don't put off the spending, and that would really help things looking forward in terms of the trajectory of the U.S. economy.
Stephanie, just out of interest, what would you like to see in the bill beyond just extending current law?
Well, I'd like to see, some of this deregulation come through, and that's, been a big part of what we thought would spur the market. It's been the exact opposite. So we need some new measures in there in terms of, what can be pro-growth, not just an extension of the tax cuts. So deregulation, maybe some additional tax cuts that we weren't going to see. But of course, how are we going to pay for it? And that's what's really going to be the big negotiating front in Congress in terms of how we're going to get to the final bill.
Could define the rest of this year. Stephanie, appreciate your time. As always, Stephanie Lang there of Homrich Berg. Stephanie, thank you. This is the challenge in the second half of the year. Extending current law plus what? And it's the plus what that we're still wrestling with.
Well, the Treasury Secretary seems to think that we're going to get everything Trump pretty much promised on the campaign trail. No tax on tips, no tax on Social Security. I would say look to what's happening in Congress, the factions that are building, and these slim majorities you have in the Senate and the House. How do you get all these individuals on board, especially leading up to the midterm elections? Speaker Johnson, or maybe Speaker Donald Trump, will be herding cats when it comes to getting this bill across the finish line.
Can we call them the salt lobby? Just how strong is the salt lobby right now?
It's pretty big. They can tank the bill if they want, and they're pushing for a minimum 20, 25K when it comes to salt. And we should remind the president he came to places like Nassau County in New York, where he did not have to go out on the campaign trail and promise to lift the salt cap.
That's the trade story plus the tax story for later this year, and the reason why a lot of people are still unsure about the next 12 months or so. Equity futures on the S&P 500 negative here by 0.8% on the S&P, following what has been a stellar run in this equity market. With the latest on news elsewhere with your Bloomberg Brief, here's Yahara. Hey, Yahara.
Hi, John. Israel is promising a harsh response to a missile strike by Houthi militants that penetrated its aerial defenses and struck near an airport. Prime Minister Benjamin Netanyahu responded on X, saying Israel will respond to the Houthi attack against our main airport and at a time and place of our choosing. Taiwan's dollar surged by the most in over 3 decades on speculation exporters are rushing to convert their holdings of U.S. dollars to the island's currency. Traders are betting that Taiwan's central bank may be allowing the currency to appreciate ahead of a U.S.-Taiwan trade deal. And Disney's Thunderbolts debuted at #1 at the weekend box office. According to ComScore, the superhero film grossed $76 million in U.S. and Canadian theaters. So far this year, box office sales are up 167% from the same time last year, according to ComScore. That's your Bloomberg Brief. John?
Yeah, thank you. Maybe it's me, but I thought the movies were pretty terrible so far this year, no?
I don't think I've seen any new movies this year.
Wait for Mission Impossible, the new Formula One movie. I think all of that comes.
Alright, so we're looking good on GU by the looks of it. GU's still looking good to break the high. EU just messing about, but I still think this is looking good to break the high. Gold also messing about. Now gold, I was actually going to add even more to this because the setup is amazing, but I'm not going to do it just in case I'm wrong. So yeah, I'm not going to add more. But this looks really good on gold to go down just a little bit as well. Yeah, honestly, just waiting, guys. Probably things are probably gonna start moving in the next 15 minutes, I would say. Yeah. Yeah, I would say next 15 minutes, we could get some movement on gold. But I really like this short on gold. Now we're also in GU and EU. Again, I'm just waiting for those two to move. This is likely to go up. I'm not gonna lie on GU and EU. Honestly, I feel like extending my TP a bit higher. But if the gold trade goes well, then I don't need to do that. So yeah. Plus, yeah, I mean it's a good trade anyway. You know, just make some money for the beginning of the week so we can have some, you know, how should I say, a buffer. You know. Plus, if this goes up, then I can get my FTMO passed, and then if I can get my FTMO passed, then I can finally finish it off, and then I'll just have the phase 2 to finish, and then yeah. But yeah, guys, gold looking good in gold. I like gold. I really do. I like the gold trade. So you should too. But yeah, I like the gold trade. I like EU trade. Yeah, man, I'm liking everything, you know. We'll see what happens here, you know. If I'm wrong, I'm wrong, you know. Then it is what it is. Like I can't really do much about it. Manage the risk is the only thing we can do, but yeah, I think we're looking good. But yeah, if you guys got any questions or anything like that, just let me know. I'm here. And yeah, I'm watching, guys. I'm watching. Just doing some other things in the background, but I'm watching. I'm looking to see if there's any other trades we can get into, but it's not really safe until Wednesday after when Thursday, Friday, I think is when the better trades will come. I think this week, but we'll see. Could be wrong. You know, we could be getting entries that are planning a setup for Thursday, if that makes sense. You know, for example, if we get the high of the week on gold, GU, EU, you know, then yeah, you know, we could be setting up. But this thing is likely to go down, man. Honestly, I feel like putting more money into this just because I need to make some money right now, but yeah. Oh wow, the 20th of May, are you going on holiday? What's going on? What's going on, bro? You just came from holiday. Yeah, bro, I feel you, man. This could be one of those trades where you could make about 1 to 2k, but I just don't. I don't know, man. It's my first trade on a Monday. I mean, it's the first day of the week. I don't really want to mess. I feel like it could be a big trade, this gold one. Yeah. We can catch a big trade, but I just don't want to risk too much. Oh, Europe League finals, innit? Oh, yeah, nice, nice, nice. Yeah, bro. Bro, this gold trade, I'm telling you, bro, like I'm like confident in this gold trade that it's gonna go down. Um, yeah, I just don't. Yeah, I'm kind of confident on this gold trade, just to let you know. See what happens. I do believe this is gonna go down somewhere here, maybe. At least, maybe even lower, to be honest. I think it could go down here, or it could actually go down to where my TP is. But I don't know if that's gonna happen today. You know, there's no really any like crazy news that would do that. Yeah, yeah. GU going up, EU. Yeah, exactly. We don't want to risk loads and get it wrong. But the risk to reward is good on this trade. So if it goes good, then yeah. But the GU trade is doing good. You know, this one's up right now 36 pips. Was up 40 pips. Will be up 45 pips. I think it can go higher, by the way. If you want to hold this, you can. But I'm just gonna get out and take the profit, man. So I can give you a TP2 if you really want to like hold this too. This could go up all the way here. Not today though. Look, today it can go all the way up to 76, somewhere here maybe. It can go up all the way here somewhere if it does something crazy. But I'm not gonna. I ain't gonna. Yeah, I ain't gonna hold. This EU looks like it's gonna break that high. Yeah. I think the EU, GU, gold, they all go in the same direction. It's making me think, is gold gonna go up as well? But that's why we have a stop and yeah. Yeah. Let's see anyway. This might be the manipulation. I think we need this high to be taken out over here, to be honest. It's not safe until that high gets taken out, but who knows. I think this is a decent stop loss as well for this trade. A lot of mess here, man. Yeah, we'll see what's gonna happen here. It looks bad right now, but I can see this getting better too. Come on, EU, GU. GU is like coming up, man, but this EU, bro, this EU is just whack. It's just whack right now because the euro is weak as well. All right, gold's doing something. Gold's doing something. Gold's doing something. I'm confident in the gold trade though. Let's see what's doing. It's taking out this high over here on the left. Can you see that? We want to see this high break and then come back in here. If we see this come back in here, it's gonna be good. We don't want to see it leave the building. That's what we want to see, it come back to this line here. It's looking good. You see it's the divergence. It's breaking the highs. Made a high, broke the high, went down, broke the high. Is it gonna go back down? You know, this is the kind of thing I love to see in my trades. You know, GU is about to hit TP. Yeah, this looks good on gold. Alright, come on, gold. So I like what I see on gold right now. I ain't gonna say much, but I did add a tiny bit here more. Just because I select this break of high. Don't do what I'm doing, but just because I'm confident in this trade. And yeah, I've seen this kind of stuff before happen, so yeah. Could be wrong though. I hope I'm not wrong, but I could be wrong. Got so many accounts I manage. Sorry for the noise. Yeah. There we go. I could be wrong, so I'm ready to close all these trades out if I'm wrong, but alright. Let's see what happens. Let's see what happens on this gold. Did I just catch the high or no? Let's just see. Let's just see. Let's just see. You know? Let's see what happens. Yeah. I know I'm close, bro. Trust me, like, it's just, this is a pattern I've seen before, you know? Yeah, it's just a pattern I've seen before. It's a sign I've seen before here. It's just, you know, this is, it goes to your algorithmic levels, goes to your levels, and it does this stupid shit. It takes out this high here. It's just juicy, man. Like, you know when you see something that's juicy? This is juicy, bro. Yeah, it's juicy. It's getting juicier. But I could be wrong, man. And if I'm wrong, I'm wrong, man. It's just is what it is, you know. Yeah, I could be wrong. I hope I'm not wrong, but yeah. Oh, GU just hit TP. Yo, GU just hit TP, guys. GU just hit TP. Well played, guys. GU just hit TP. Yo. GU just hit TP. Let me just tell the Telegram group. Flips close. Yeah, we just hit TP on GU. GU just hit TP. Okay. GU just hit TP, man. Wow. Alright, guys. Well, GU just hit TP. Alright, nice. We just hit TP on GU. I'm kind of happy now. EU's about to hit TP too. EU's about to go for TPC. This is broke that high. You see what I'm trying to say? Yeah. Yeah, GU just hit TP. GU going crazy. GU going crazy, man. Yo, GU going crazy. Well, it hit TP, man. We caught it. We hit TP. EU's about to hit TP. EU's about to hit TP, man. You crazy. Gotta take some profit, man. Gotta take some profit. Come on, man. Come on, EU. Come on, EU, man. I need EU to go up, man. But yeah, we just yeah, plus 45 pips. Oops. We just hit TP on GU. Well played, guys. Hey, anyone who took that, well played. What's up, Carol? Hey, man. Good morning, good afternoon, wherever it is. Yeah, we just hit TP on this. This I think can go higher, but I just took the profit because yeah, it's a good idea to take the profit now. EU still hasn't hit the profit target. It's also a good idea to take profit here if you want, just because of the time of the day right now. But yeah, I'm just gonna leave my TP on this. Stop loss to break even. Whatever happens, happens. We've made money today for the day from GU. Gold. We're waiting for this to go down. This could be the entry right here. Yeah, I think gold's still good. GU, EU. I just want EU to go a bit higher, man. But yeah, you're gonna start seeing some rejections coming up, probably. But yeah, come on, guys. We just caught a nice trade on GU. Everyone that caught it, well done, well done, well done. And yeah, man, we're making money, man. This is what we do. This is what we do. Now we just need gold to go down, and we should be good. We should be good. Come on, man. If EU goes up a bit more, it will be good as well. See, this is what I like to see on gold. You see these rejections here, divergence. I'm telling you guys, we caught a really good entry on gold. Like really good entry. Like this is like some crazy entries. Like the drawdown, you know what I'm saying? If this goes down, bro, like the entries we just caught on gold is crazy. But I like this pattern. I've seen it before. It's just, if we lose a little bit, but if we gain, we can gain a lot. And also, I'm probably gonna just take it to somewhere here, just for a day trade, depending on the action. But I think this could go down all the way here, if I'm right. But I've also seen it where it does this, and then does this, and then this, and then this. So if we get it here, we just take the scalp, get the fuck out, or put the stop loss to break even, and then wait for the next pump up, and then sell it. Yeah, we're back. See, what I say, we're going back on gold. GU pumping like crazy, EU pumping like crazy. Man, all the trades we got today were good. Congratulations, team. Congratulations to everyone that caught these trades. We're doing good, man. We're doing good. We're doing really good. This GU is going crazy, man. I don't know what to say to you guys, but GU is actually going crazy. You know. Yeah. We're making money. Literally, man. What an amazing trade. I was gonna hold it for longer, but it's okay. It's okay. We're also in EU as well, so EU's pumping. EU's about to hit TP as well. Just to let you guys know, EU is literally about to hit TP. So, yeah, we're doing very good. We're doing very good here, man. We just need gold to go down. If gold goes down, guys, it will be a good day. But yeah, if gold goes down, it will be a good day. But yeah, man. Come on, man. I know this EU can go up more, which means GU is probably gonna go flying. Yeah, that's crazy. It's crazy, man. See what this gold does. This is the time of the day where things can make a move. Oh yeah. But yeah, man, we got some nice trades, man. wait. Fuck. Yeah, man. EU flying too, bro. We need that to hit TP, though. Still hasn't hit TP. It's pulling back, though. But I think these things are going to go higher than my TP. I might be taking profit a bit early, but it's okay. So, yeah. We need gold to go down, man. Well, if gold goes down, I'll be happy. That's all I care about right now is gold going down. GU, we took our profit in. EU, we're safe. The trade is break even, you know. You know, if it goes up, we make money. If it goes down, you know what I'm saying? Like it's just break even. But I think this is gonna go up. I'm not even worried about this trade. This trade already, we're out of it, made money. EU, we're gonna be out of it soon. Gold is the only one I care about right now. Because if this gold, bro, if this gold goes down just a little bit, man, we get out, make money, we're up for the day, everyone can be happy. You know what I mean? I mean, we're already happy. We already cashed in the profit from GU. But what I'm trying to say, we can be even more happy. You know? And I think we can be very happy today. So yeah. I think we can be very happy today. It's raining today right now in London. And if you guys can see, the weather is just bad, man. I kind of just want to get my trades done, make some money, call it a day, go to the gym, you know, something like that, you know. Yeah, get other things. What else do I have to do today? Man, it's yeah, I got a couple of things I gotta do today, but I just want to make money, man. That's the main bit today, to be honest. Yeah, I'll have my FTMO challenge phase 2 ready for tomorrow if this EU goes up a bit more. And yeah. Oh, you're in Germany. It was super sunny in Germany and pissing it down in Spain. Yeah, I mean the UK is raining to here too. It's been nice weather here, to be honest, in the UK. You know, I haven't been going out as much, which is annoying, but I wish I would have. But yeah, the weather has been nice recently, so the weather has been nice. But today it's just raining. I guess that happens when it's like, you know, sunny every day. So yeah, we'll wait in though.
You know, we keep hearing that there's discussions with China, then we hear that maybe there isn't. So my thinking is that we're going to see deals with the other Asian countries ahead of time.
Before we get the bigger deals, how distorted will this economic data be through the summer?
Well, and that's really what we're waiting for is the data, just like the Fed is. One data point, which is, you know, not directly about consumer spending that we look at, is our own consumer confidence index and the expectations part of that index, which continues to be at, you know, more than a decade low. It's in sort of that recessionary territory. We're also looking at port numbers, including the fact that the Port of LA is taking in about a third less cargo right now than it usually does in this time of year.
When it looks at the expectations of consumers, what does this environment remind you of? What other point in time have you seen some of the survey data look like we have today?
It looks like the Great Recession or the years after the Great Recession, which took a lot of time, you know, to come out of that moment. It doesn't necessarily look like the pandemic, because the pandemic obviously was something that sort of gumming up of supply chains was caused by an external factor. This is obviously something that is policy related and something that can change potentially.
We know that consumers are nervous about inflation and prices going higher because of the tariffs, but what you're also seeing is employment deterioration. This idea that prospects for getting a job is also challenging.
Yes, and that makes consumers more nervous than anything. You know, having a job, and we've seen in our history of looking at this, when consumers have a job, they're going to spend. But when they don't have a job, or they really think that their job, you know, is at risk, then they will sort of pull back spending and just concentrate on sort of the necessities.
And they won't be asking for a pay rise. What does that tell you? The attitude towards the labour market right now, what does that tell you about the risk, the perceived risk of second-round effects from the tariffs and what it could mean for prices?
I think it means that, well, on the company side, the Conference Board, our members are companies. So many of them are right now trying to figure out how to best communicate and analyze how to pass on prices or how not to, and really how to message with their consumers. And I think for consumers themselves, it's really a matter of sort of pulling back and wait and see. But that's sort of that continual uncertainty that sort of makes it increasingly risky.
Is there a particular date on the calendar that you're worried about an air pocket in the data? Is it weeks away, months away?
I think it is somewhere between weeks and months. I think it is 6 to 8 weeks away, which is, at the Conference Board, similar to Goldman Sachs. We are thinking that July may be the first meeting where the Fed, takes another look at interest rates.
The Polaris CEO last week said that they're implementing a recession playbook. Do you see other companies having to do that now, and how self-fulfilling is that?
That's a great question. It can be self-fulfilling from a consumer side. Obviously, we're still in a consumer-based economy. I think it's very interesting that companies are having, as we've seen with some of the earnings reports, they almost have two scenarios, the scenario A, scenario B. But no matter what, for companies to plan to onshore production, if that really is the goal here, is something that takes years, if not up to a decade, depending on what you produce. So it's very, very hard to have a long-term playbook if you really don't know how long these trade and tariffs are going to be in place.
Right, so you just wait on the sidelines. So if you think we're going to see this hard data in July, but companies are already saying they're doing things like a recession playbook, do you just feel like the Fed then is bound to be late?
It's hard to tell because obviously the employment numbers were still strong. Inflation is still pretty flat or coming down. So they have to have a reason, a data point in order to make an adjustment.
We'll get more data later on this morning, 10 a.m. Eastern Time. You'll get the ISM services print. Erin, it's good to see you. Thanks for being here. Erin McLaughlin there at the Conference Board. Following the consumer confidence numbers, and the consumer confidence have been rock bottom, not great at all across several measures. What you haven't seen, though, is the hard data collapse to the soft data, and that's something economists and all of us are still waiting for.
Absolutely. What you see in the surveys is that consumers are nervous, not just about price hikes, they're nervous about potentially losing their job. But so far, what have you seen in the hard data? Retail sales has been stellar. If you're nervous, you brought up this point, if you're nervous about losing your job, why are you going out and getting goods? Because you're nervous about prices going up. When this actually starts to trickle down to the hard data, we'll finally give the Fed a little bit of some breathing room to potentially cut. Until then, though, expect the White House to continue that job voting.
ISM services coming later this morning, then about an hour and 22 minutes away. Then onto the Federal Reserve on Wednesday. More claims data on Thursday. The scores going into the opening bell shaping up as follows. Equity futures negative by 0.8% on the S&P 500, following a 9-day run on the benchmark in America. On the Nasdaq 100, we're negative here by 1 full percentage point. In the bond market, the Treasury yield looks like this. The 2-year 380.75, the 10-year 432.97. Yields are higher on a 10-year maturity by about 2 basis points. Joining us now to discuss is Deborah Cunningham of Federated Hermes. Deborah, welcome to the programme. Something that you said last time we caught up with you, when we last spoke just around April 2nd, you said long live higher for longer. Is that how you see things still?
It is. I'm much in agreement with previous discussion on the show this morning, which is we don't see any kind of a cut from this Federal Reserve until at least July, and maybe even longer, depending upon how the data stacks up between now and then. There is additional information that I think Chair Powell is going to continue to want to see, and without his being comfortable, the leadership is going to follow, everybody's going to follow the leadership from his standpoint, and it's a wait-and-see sort of situation.
Well, in this wait-and-see sort of situation, though, Deborah, we are hearing from policymakers in Washington, the president notably signaling that there will be trade deals. So do you expect clarity in the next few weeks and months?
We hope for clarity in the next few weeks and months. I can't say that we would expect it. It seems as though there have been ups and downs from an administration standpoint with regard to discussions around tariffs. They are being discussed, and then all of a sudden they are not being discussed any longer. So I think what we're trying to do is measure what happens as it happens, rather than try to guess what might happen in the future. The guesses are really, I think not very well formed given the information that we have to go on so far.
Right, but the administration is talking about, say, with China, which everyone is focused on, that the rate is unsustainable, and the president said he is going to drop it. Does that give you at least some hope that potentially you can see some positive trade momentum and give the Fed a little bit of breathing room in terms of where policy is going?
Definitely there's hope along those lines. And I feel like we in the United States are closer to it than others. I've spent some time in some of our global offices outside the United States over the course of the last month. And there is much less optimism, both in Asia and in Europe, with regard to how these deals play out, when these deals play out, and to the extent that these deals play out. But I feel like at least here in the United States, where we are closer to it, where we hear and see things on a local basis that maybe don't hit the global news channel, we definitely have more of the appreciation of that hope here in Pittsburgh, at least.
Debbie, lots of people talk about rate cut expectations and market pricing. When you speak to economists right now on Wall Street, you can drive a truck through the range of estimates. At the one end, you've got zero, the likes of Morgan Stanley. At the other end, you've got the likes of Citi looking for 125 basis points of rate cuts. It just feels like market pricing, we're averaging out two very, very different scenarios. Which scenario is your base case, if you can even have a base case?
Our base case is 2, maybe 3 cuts for the remainder of 2025. However, much like other world economists, our own, what we call our STIC committee, our short-term investments committee, has a number of voters that are looking at, expectations for the rest of this year and into 2026 and 27. And you could also drive a truck through our own estimates. We have, one person that's in the camp that before the end of the year, there will be a need to hike just from an inflationary perspective, whereas others are, in the more normalized 2-3 cut scenario. And then there are some that are on the far other side of the equation. So long tail with regard to our expectations internally as well.
Debbie, appreciate the transparency. You're not alone. I think that's a reflection of investor committees across the country and around the world right now. Debbie, thank you. Deborah Cunningham there of Federated Hermes on the current situation, not just for them, but for pretty much everyone trying to make a forecast for the road ahead. Equity futures at the moment, near session lows on the S&P, down about 8 or 9/10 of 1% on the S&P 500. With an update on stories elsewhere, here's your Bloomberg brief with Yahira. Hey, Yahira.
Hi, John. The Trump administration is planning to release a proposal to modernize the U.S. air traffic control system. The need for the upgrade was brought into focus on Friday when United said it would cut 35 daily round trips at Newark International Airport due to technology breakdowns and a staffing crunch. Shell is considering an acquisition of its rival BP. Sources telling Bloomberg a final decision will likely depend on whether BP's stock continues to slide after losing nearly a third of its value in the last 12 months. Deliberations are in the early stages, and Shell may opt to focus on share buybacks rather than a merger. And Scottie Scheffler just dominating the CJ Cup. Byron Nelson tying the PGA Tour's 72-hole record with a score of 253, totaling 31 under par. Scheffler cruised to an 8-shot victory, his first at the hometown event he grew up attending. His performance broke the tournament scoring record and marks his first win of the year. Very cool to watch. That's your Bloomberg brief. John?
Yahira, thank you. Ridiculously low scoring over the weekend. Up next on the program, we'll set you up for the week ahead. You're watching Bloomberg TV.
Gold is doing a weird thing. Now I'm gonna give it some time. Hopefully we just stay in this range. We don't do anything. As long as we stay in this range, we're okay. If we start leaving, then it starts to become like, I could be wrong. It's crazy because it's a high probability kind of trade, but I guess anything is possible, right? Dollar is also an interesting point. Let me look at the DXY. I still think we can go lower on the dollar. See, gold's going up right now, even though the dollar's. It's just a lot of manipulation, man, happening. It's like I said, this is a high probability trade in my opinion, from my experience on gold. So just gotta not like be scared to be in this. Yeah, just don't be scared. Don't be scared. Don't be scared. Yeah, man. Confident in this trade. I need to change this. Just moving my stop loss because I forgot this broker on one of my accounts has a weird spread, so I have to like make sure it doesn't hit it, just in case. The other day it hit it and my other accounts didn't hit it. It's weird, man. Depending on the broker, like sometimes you have to make your stop loss like bigger, you know, just by a little bit, you know, because the spread and it's weird, man. Some brokers are really scummy. This one I'm with it's kind of scummy, low key. But problem is, it's a good broker to have if you have a lot of money. It's safe, you know. You can't trust every broker to hold your money, you know, because if you have a lot of money, you need a regulated broker, in my opinion, to hold that money. Otherwise, they could just scam you, you know. Some brokers do that. But you gotta be careful in it, in my opinion. Like, if it's just some unregulated broker, I'm not gonna hold over 6 figures in that broker, you know. You know, yeah. Gold, gold, gold. I said gold, gold, gold. GU coming up, EU coming up. EU, come on, EU. GU gold grinding. Gold is grinding up. Problem is the news is in an hour. That's what I'm scared of. I'm scared that the news comes out in an hour and then yeah. This last 10 minutes of the 4-hour candle, things should get more volatile. This EU, man, come on. Good on gold, come on. Please be the high on gold. 22. I know we're close, guys, on gold. I just know we are, you know, on this gold trade. I just know that we're close. What did this be the high, man? No, we could be close on this gold. I just know we could be close on this gold, man.
How they want to see this done.
Well, the administration wants to see it done by Memorial Day. Tyler, honestly, how likely is that?
Well, at this point, that's considered to be a very ambitious timeline. We've spoken before about how Senate Majority Leader John Thune has called that aspirational. Scott Besson has put a July 4th timeline on this, on when he would like to see the final reconciliation bill passed. But I spoke to one senior aide to Senate Republican leadership who said that they do not expect their chamber to really start working on this in earnest until August at the earliest. There is a lot that needs to happen here, but one thing, though, that is clear is that Republicans are really starting to fall in line behind President Trump's agenda, at least on the Senate side. They seem to be more likely to go behind having these bigger tax cuts, whereas the spending fight really seems to be coalescing in the House. So we're going to have to watch those two dynamics, because while House Speaker Mike Johnson wants to see this done by Memorial Day, that means he's really going to have to ramp up his pressure on his members to get a deal done if they want to meet this July 4th timeline.
Tyler, appreciate it. Tyler Kendall down in Washington, D.C. Memorial Day, just a few Mondays away.
It sounds very challenging. They're going to get this done on Memorial Day. It's not going to happen. But what I would say we need to really keep an eye out for is when the Treasury comes out with the X date, when we're going to hit our debt limit, because they want to include lifting the debt limit in reconciliation. And pretty much by design, that gives them a timeline. Of course, though, they could do carve-outs, and they could just do the debt ceiling and say we're not done yet when it comes to taxes. This tax deal, I know the administration has a ton of priorities in it. It is going to be very challenging to get all of these Republicans to line up and vote for it, given the fact that they all have different constituents. A New York Republican is very different than a Nebraska Republican right now.
Timing and substance. Substance informs the timing. Because the substance is so controversial, it's going to push out the timing potentially. That's the risk here.
Potentially. Some are even saying it could be done by the end of the year. Chris Harvey was talking about January because of the weather is so awful in D.C. by August when it comes to humidity. But I think it is going to have to get done this year. And this administration is desperate to change the talking points. They want to talk about taxes. The question is, though, for market participants, and you brought this up before, is it removing the headwind, or is there going to be a tailwind? Meaning, is it just going to be an extension of current policy, an extension of TCJA with these sort of first-come administration, or are they going to get some of these sweet maps? Something to think about, guys. Tomorrow, on ESP 500 negative by 0.8%. The opening balance just around the corner. Coming up tomorrow, reacting to all of this, we'll catch up with Karen Dorst and UH Wealth. We'll speak to Jonathan Pekel of UBS.
Oh shit, I didn't even have the thing on. Oh man, yeah, alright guys. Looks like we're looking good right now. Yeah, as you can see, gold's going back down. That was probably the high, hopefully. EU pumping again, guys. Like, look at this, EU pumping. Broke the high. It's pulling back right now. GU we closed. We closed at a good price, guys. It's a good day, man. It's a good day. What can I say? What can I say? It's a good day. Just hopefully this gold keeps going down and we can make some money, man. Yeah, waiting for gold, waiting for gold. That's what I'm waiting for right now. Just gold. Go down on gold and yeah. Yeah, so we'll see. Shit, there's a level just above us here. I didn't even realize it. Someone told me about it, like a friend of mine. I didn't even realize that on gold. It's kind of an important level. I mean, hopefully we just go down and ignore that level, but yeah, there is a level there. It's 3326. I mean, we're in this trade. It looks good, but yeah, there is a flipping level here. It's annoying. Ugh. We'll see what happens, man. Honestly, I might call it a day because I am up in profit for everything. If I close everything right now. But I am just waiting. Just waiting, guys. It's a waiting game right now.
Were set up a number of years ago with Greg getting the nod as being Buffett's heir apparent. So he's had a number of years to prepare for this. I still think there's going to be a period of adjustment. And I think the important thing for investors is calculating or figuring out what happens to the Buffett premium in the shares. And I think that's where we see some of the pressure this morning is as investors weigh the implications for a post-Buffett Berkshire Hathaway.
What is that Buffett premium, Kathy? I mean, you look at some companies, I think right now Tesla is probably the best example with a market cap of almost $1 trillion, and obviously it's a small car maker. Is Berkshire Hathaway the same kind of thing where because they have a superstar CEO, they get a huge premium in terms of their market cap?
He has become a superstar, but I think it's because Berkshire had a CEO who was acknowledged to be, a top-tier investor. And I think that's the premium embedded in the shares. And with him gone, investors are going to have to decide what kind of a premium does the company, is the company afforded? I mean, they do have a very strong balance sheet. There is a lot of cash on the books. But there is still a Buffett premium that I believe is going to have to be extracted from the shares. And I do see they're set to open lower this morning. I think in the very near term, there could be some pressure on the shares. And then as the year progresses, there may be a little volatility as investors come to get more comfortable with Greg Abel as they look to see what potential changes he may make or not make at the company.
I mean, over his tenure, he's returned, Warren Buffett with Berkshire, an annual 20%. That's double the S&P. Why is this just a hold for you? Don't you want to own this for the rest of your life?
I had it as a buy last year and took some profits when the stock had run up and when revenues had slowed. Revenue growth last year was under 3%. They reported, lost in all this was their first quarter results. And, you know, on a fundamental basis right now, the shares to me look fairly valued. Obviously, if there's a pullback, I'll reconsider that. There are a number of, I believe Berkshire at this point is at an inflection point from a number of perspectives, not just managerial. I think a number of their businesses are at an inflection point, sort of echoing where the economy is at an inflection point. So I think this could be a transitional year more than just from a managerial perspective. So I think it makes sense right now to be a little cautious on the shares. Yeah, I mean, longer term, it's a great stock. In the near term, there are a couple of headwinds I'd be a little concerned about. Not overly concerned, but I think it merits a little caution right now.
You know, Warren Buffett looked very smart coming into this year, selling off stock and raising a ton of cash as the market, you know, came crashing down. Obviously, we've had an incredible run over the past 9 days, but is that just part of his genius? Did he get lucky? You know, the timing looks pretty amazing.
Let's give him the credit where credit is due, and he did a smart move, and in many respects, you know, I realize he said he's not setting things up for Greg, but he did sort of get his ducks in a row, got his house in order, however you want to, you know, express that. Greg is inheriting a company that's in a good position, but does have some challenges. And, you know, there is the cash hoard at Berkshire that people are looking to see how that will be deployed. I would also caution investors that entire cash hoard is not going to be deployed. A lot of that is also a reserve to pay insurance claims. But even if we assume that Berkshire has, you know, $100 billion of dry powder, I think investors are going to be watching closely to see what kind of moves Greg may make.
Do you see anything, Kathy, that you think it would be smart to spend that money on, or do you think they should redistribute that back to shareholders?
Well, you bring up an interesting point, because I also think that there may be a cohort of investors in Berkshire that may start agitating for the company to pay a regular dividend, and I don't think that that's an outrageous request. And so I think, you know, add that to the list of things that we may see change at Berkshire. Now, it may not change this year. It may not change until Buffett is no longer at the helm, but that is one thing that I do anticipate there may be pressure on the firm to consider.
Kathy, great to get some time with you. Hope we talk to you again soon. CFRA's Kathy Seifert talking to us about Berkshire Hathaway. Coming up, we begin the trading day with Threadneedle's Ann Berry. We'll ask her if she thinks now is a good time to get out. This is Bloomberg Open Interest.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Looking at the S&P 500 over 9 days, we had more than well, here you can see 7.5% gain. It was an incredible rally that took us back to levels we haven't seen since Liberation Day, when we heard about the tariffs that shocked the world. Here at the desk with me is Threadneedle Ventures founder Ann Berry. And Ann, you know, that was the climb after the huge drop that had everyone just in a panic, right? And I'm wondering if those people who were panicking because they held on to stocks knowing that Trump was going to do this, but not to that extent, is this now a time for them to get out while they still can?
Sell the rip is the question. I don't think so, and here's the reason. I'm a long-term believer in the US equity market. But I don't really understand why we're at this particular moment at the level where we are at. To be honest, Matt, you and I were talking about it right before we went live. The fact that we're now at a level that's above where we were pre-Liberation Day, despite the fact the macro outlook is so much more uncertain, is baffling to me. I do think where the market is at is hopeful that this will resolve itself in a way that we saw the 2017 tariff regime level out, in a way that, quite frankly, there was bipartisan tacit agreement that something needed to be done with respect to the US's trade position. And I think the hope is that tariffs land in a somewhat sensible place, and then we have the halo of deregulation and tax cuts on the horizon. So I wouldn't sell in case it gets to a sensible position, but I do not understand why valuation right now is higher than it was.
So here's my concern with, first of all, tax cuts. Really? I mean, we're just going to get an extension of the tax policy that we've had. So you and me, we're not going to feel like we got a tax cut, right?
Well, I think there are some other tax policies that President Trump has talked about. He's talked about, in some cases, having no income tax at all, right, for certain folks, for example, below the $200,000 a year level. He's talked about trying to bring in more tax incentives for families. So yes, it's the extension of what has been, but I think there are some other places. Also, he's not given up on the idea of lowering corporate taxes, right, even lower. So I think that's something that's still hanging out there.
And they already don't pay taxes, right? The U.S. government gets like less than $500 billion from corporations. In terms of deregulation, that's also where a lot of people were very hopeful and I think have been, to some extent, burned. We haven't seen a huge wave of M&A as we thought we were going to.
Well, we haven't seen M&A yet, but I don't think that's because the belief is that deregulation isn't going to happen. So we've seen, for example, deep-sea drilling, like deep-sea mining, for example, is something that has come back on in. I don't think we have seen yet the end of where President Trump decides to go when it comes to financial regulation. Look at what happened at the Consumer Finance Bureau, right? So I think things have been quietly happening that haven't had the headlines because of the tariff noise, and I don't think we're done yet. So I wouldn't give up on deregulation yet.
All right, we're going to keep you with us over the open. We'll see if we lose at the beginning of this session. It does look like the 9-day rally is over, but futures are only down. You can see Dow futures down 260 points, S&P futures down about 0.8%. In terms of the other interesting moves, I go on the Bloomberg terminal and type GLCO GO a lot lately because that shows you global commodity prices. And we've seen a real drop in oil that I think is absolutely fascinating. NYMEX crude down to $57.35. Brent crude off down to $60.43. This after OPEC Plus said it was going to raise production again on Saturday. And that's what's, I think, President Trump hopes is going to bring gas prices down. He's cited a price at the pump of $1.98. I'm still seeing $4 in Westchester, but, you know, it's not West Palm Beach. We're going to get the opening bell up next here in New York City as we bring you coverage also from the Milken Global Institute in Beverly Hills. This is Open Interest.
Alright, we're just waiting for this market to open. And yeah guys, just waiting for the market to open. It's a bit slow right now. We're just in a range. We've been in this range since 11. It's 2:30 now. Yeah, I don't know, that's like 3-4 hours now. But GU went well again, guys. You know, we looked in the profits for that. EU's pumping up higher. We're going up higher, man. Almost at TP. Now once gold goes down, that'll be nice. But yeah, the range is it's ranging, man. I will be out of this in the next hour and a half if nothing happens. So we're gonna give it some time. Hopefully make some money. Hopefully no rangy BS. But yeah. But yeah, guys, hope everyone's having a good day, and yeah, I'll keep you guys updated. The market opens in 2 minutes.
What is the answer? I don't think he gave you a chance to really answer that question, but what is the answer to that question?
Well, first off, the Bank of America has 70 million consumer customers and millions of small businesses all over the country, all over the world, and so we bank everybody. But the real question was about overregulation, frankly. And so as you look, what's happened is because the interpretations of AML, Anti-Money Laundering, BSA, Bank Secrecy Act, KYC, know your customer, know your customer's customer. You know, there's a lot of burden upon the banking system to both report suspicious activity reports and do a lot of analysis. And we have to close accounts, so we can't tell people why we did it. And often we're told by authorities to close accounts. That creates confusion. Another area comes up in this discussions in the crypto area where the regulator said you can't bank crypto operating companies, employees of crypto companies, etc. We are allowed to do, we bank everybody, but the operating company, they said that's a high-risk activity, ask us for authority, and guess what? You would have never gotten the authority. So that came up as an issue. So at the end of the day, it's about getting these regulations right.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
We are looking at futures down at the end of a 9-day rally. We're moments away from the start of trading. I'm Matt Miller. This is Open Interest. You can see we're off about 0.8% on S&P futures as some of the big tech stocks that rebounded so heartily. It looks like investors may be taking profits there to some extent. Also, President Trump has said he's not going to speak. He's not planning on speaking with Xi Jinping this week. NASDAQ futures are down 0.9%. You hear the opening bell on the New York Stock Exchange. Vesta ringing the opening bell. They're a group of happy men there, up 10% year to date. So they're actually making money in this market. You can see Morningstar ringing the opening bell on the NASDAQ, a service that I think a lot of us use every day. So great to see them there. In terms of the stocks that we're watching, Berkshire Hathaway is a huge one. Obviously, more than $1 trillion company, moving a little bit lower today after Warren Buffett's decision to step down as CEO. It has been 60 years. You know, it's time for the guy to rest a little bit, although I'm sure he won't. Skechers is going to go private at $8 billion deal with 3G Capital, and the shares are up 25%. Netflix, though, down more than 3% in the early cash trades. The Trump administration says it plans to tariff the film industry. So let's get back to Threadneedle Ventures founder Ann Berry. She's still here and has thoughts on Netflix. And what an interesting move by the president. I guess he was hanging out with John Voight. Maybe he'd been thinking about this for a long time, because people make films a lot more often now in foreign locations. A company like Netflix goes to South Korea. They go to Germany. They go to Spain, right? Instead of doing it in Hollywood. How does this affect them?
Well, I think it affects their near-term pipeline, right? As they think about their cost of production, that's going to have an immediate-term impact. But Matt, Netflix, when you take a big step back, is fascinating to me, and I've been long on it for a long time. It's been a terrific run-up. When I think about this particular environment and a consumer that's feeling squeezed and uncertain, I put Netflix in the bucket of what I now call the new affordable luxury. I think we're going to see strength in Netflix subscriptions. I think we're going to see strength in Netflix advertising dollars, because it's one of the platforms I think that big ad spenders still want to go to. So I think this is a concern. I think this still falls in the bucket of a negotiation tool. I wouldn't be surprised if some of these sort of film credit and film cost issues disappear over time. So I'm still bullish on Netflix.
All right, so that's Netflix. In terms of your affordable luxury theme, what else is in that basket? Because I get that, right? You're only spending $15 or $20 a month. I don't know how much Netflix costs these days, but obviously I'm buying it too. And it's less expensive than going to the actual theater. What are the other affordable luxuries you're looking at?
I put Spotify in that bucket too, and actually it's trading at a cheaper valuation.
These guys
than
just
Netflix.
chant the most.
Certain elements of beauty.
That's interesting.
Beauty's been under some stress over the last year. But areas like premium skincare are still doing very well. Blue Mercury's moving to, I'm on the board of Rodan & Fields. Ulta's pulled them in.
Gold's pushing down, guys. Gold's pushing down.
Something that people are willing
It's some
to
profit
spend
right
on,
now.
because as they cut
I
back
see
on,
green,
for
guys.
example, of cheaper
I see
cosmetics,
green.
to go in on efficacious. That I think
I
continues.
see green on all
L'Oreal,
my
as a
accounts.
public stock perspective, I think is better positioned than others.
Yeah, boy.
The last thing I would
Yeah,
say,
boy.
Matthew and I have talked about this before, I think the cruise sector is undervalued. I think post-COVID consumers are going to fight tooth and nail to keep some budget allocation to travel, and I think the value proposition that delivers it are people like Royal Caribbean and Carnival Cruises, an affordable travel luxury or vacation luxury.
So the idea is that because these are usually package deals, and it's less expensive than booking your own flight, your own hotel, your own activities, a babysitter, etc. They're going to the all-in-one Royal Caribbean or, I don't know, the other cruise line.
Yeah, so Norwegian or Carnival. And it's interesting, when you unpack the actual value that's being delivered to the consumer, the rough estimate is the land-based equivalent is about 20% more expensive than that cruise.
See what's going to happen, man.
So if you're a consumer thinking about how to allocate your budget, again, post-COVID, I think people are saying, I do not want to be not traveling again. Where do I go? I think cruises are a good value proposition. You look at something like a Royal Caribbean trading at a high single-digit EBITDA multiple, same with Carnival. Pretty good value, to your point, in what's been a toppy market despite the noise.
But the bottom line is you're still looking at a downturn. You're looking at a consumer that's weaker. You're looking at lower CEO confidence. So these are consumers holding on to what they can, or even trading down a little bit.
Trading down, and we've seen Walmart be the beneficiary of that. But if you look back to post-2008, for example, this affordable luxury theme came up then, and we saw people still doing things like buying certain cosmetics. We saw people doing things like buying Starbucks, right? If you actually think about it, coffee out of the home should be the most discretionary item. Why are you dropping $5 on a coffee when you're feeling stressed? And you actually saw consumer psychology and behavior. Folks were saying, in a moment where I am feeling compressed in terms of my choices, compressed in terms of income, I want to find just those small things that are small enough share of wallet that they spark enough joy that I'm going to do it anyway.
$5 a day.
Back in the day. Do you remember that? Coffee
$25
now.
a week, $100 a month. I mean, you could really save a lot of money that way.
It's really discretionary, but people were still doing it.
Ann Berry, great to have you with us. Thank you so much for joining us. Ann Berry there of Threadneedle Ventures, talking to us about the affordable luxuries that the consumer may try and hold on to in this economy. Let's talk about Merger Monday. Shell is looking into the possibility of acquiring British Petroleum, BP, and what could be a mega deal that reshapes big oil. Bloomberg's Leanna Baker covers deals for us here at Bloomberg and joins us to discuss just one of the many deals that we could be talking about today, but this would be a big one.
So this is big news, but if you read our report, it's pretty nuanced. So Shell is speaking to their advisors, their investment bankers and others to see if now's the right time to make a move on BP. BP, as you know, has been the target of a big activist investor, Elliott Management, And the value has just really not been good. It's worth half of what Shell is worth. So Shell is trying to figure out, is now the right time opportunistically to make a move? They haven't made a move yet.
Would they face real regulatory pushback? I mean, I imagine this is the kind of thing, if not U.S. regulators, then European regulators or UK regulators are fighting back hard against.
They would definitely face scrutiny all over the world, but from what I've read from research analysts, there is a good fit between some of the geographies that these companies are in where there wouldn't be that much overlap. We would look at, the Gulf of America, Gulf of Mexico, for example. That's one area to look for, but this would not sail through regulators if it got announced.
I personally worry about the gas, right? Because I'm a sucker for marketing, and Shell has the whole Ferrari Formula One thing. I can't buy gas anywhere else. But I guess I would be able to in this case. In the same area, Sunoco and Parkland, what's the story with that deal?
You mentioned gas. This is an interesting one because there's also an activist investor in Parkland, which is in Canada, my home country. So this is a cross-border deal, and Parkland, because they had an activist, they had to explore options with investment banks, and as part of a strategic review, this is clearly the option that they took, and this will be, a big move for gas station consolidation.
What are the other, what's the update in terms of M&A in general? Because we were just talking with Ann Berry about the fact that we really haven't seen a wave of M&A, the likes of which we were expecting with Trump's deregulation.
So you mentioned it's a merger Monday, and we did see 3G doing their first deal in many years to buy Skechers, a brand that everyone knows. That's a cross-border deal. We also had the gas station deal you mentioned, Sunoco, Parkland, cross-border, U.S., Canada. So we are seeing these spurts, these areas of M&A. If you know where to look, there is deal-making happening.
But it isn't to the level that maybe we would have expected. We're not going to best last year's level at this time.
A Shell BP deal would provide that jolt to the M&A markets. That would be a mega deal, and we're tracking to see if we could see other big moves like that, because in times of dislocation, that could be a time to pounce.
All right, Leanna, thanks so much for giving us an update. Leanna Baker runs our M&A coverage for us here at Bloomberg. I want to take a look at GLCO Go on the Bloomberg terminal again very quickly, just to show you a lot of my focus is on the oil patch.
Magico. How you doing?